Good morning, everyone. Thank you very much indeed for your patience as we waited for a few more people to arrive and dealt with some of our last-minute logistics. On behalf of Women's World Banking and Finmark Trust, welcome to our event, Moving the Needle, Advancing Financial Inclusion from Access to Usage. I have the exciting housekeeping elements to start with. On your lanyard, you will find the QR code where you can download the agenda. And on the screen behind me, you should see the Wi-Fi code and access for you. Bathrooms are at either end of the facility, either through the pool or the doors at the other end just over there should be open as well. My name's Liz Richards, and I work for Women's World Banking, heading up brand marketing and communication. Before I start, I'd like to thank South African National Treasury for asking us to host this event, to SECO for funding this event, thank you very much indeed, and to the Gates Foundation for funding our policy work throughout the G20 this year. For those of you that don't know Women's World Banking, if I may just take 1 minute to explain who we are. We're an organisation that's dedicated to the billion women who are excluded from the financial system. As an NGO, we partner with policymakers and financial institutions to design and deliver solutions and programs that facilitate systemic change for women. And as an investor, we advance women in the workplace and as customers through direct investments. My colleagues here today, Francesca Brown and Elizabeth Gathia, are excited to listen to the conversations today around ID, consumer protection, and inclusive payments, and obviously to see some of the data that Finmark have developed. So with that, I'd like to pass over to my co-host for today, Leseko.
Morning, everyone. I'm sure you're wondering why am I standing next to Liz. If she's gonna fall, she's not. It's only because we are hosting this together. My name is Leseko Mashego from Finmark Trust. I head up the South Africa Financial Inclusion Program there. Again, Liz and I, we thought maybe we should introduce our organizations to everyone in the room in case you don't know what we do. Finmark Trust is based here in South Africa. Our work, though, is in the region, the SADC region specifically. We have a head office that's based in Midrand, and then we have offices in 5 other countries. We are what we call market facilitators. Our intention is to make sure that when you create financial products and solutions, you think about the low income and those that are currently excluded. And that's what we do on a day-to-day basis. We're trying to get actors, regulators, financial service providers to think a bit more about those that are currently excluded and say, what are we going to do to make it better for them? And it's befitting for us, right, to then be talking about financial inclusion from access to usage. The session today intends to make sure that we deliberate. We have panels that have been set up to talk about how do we get people that are currently included following the GPFI event, how do we get people that are currently included to use what they have a bit more? But also maybe let's think about what else do they not have that we then need to provide to them. We hope that it will be an engaging session. We hope that we are going to learn from you as much as we are going to learn from our panelists. We're hoping that our panelists will give you time to also chime in at some point. Without wasting any time, I'm going to introduce the people that will be giving us welcome remarks. The first speaker is Alvina Taylor, Chief Director from the South African National Treasury. Alvina Taylor, please join us so that you can provide us with your opening remarks.
As you can see, I don't get paid enough to have an iPad or something smaller. So I've brought my workstation. Is the sound okay? Okay, let me come this side. Awesome. Okay. GPFI members, I still see quite a few, guests, colleagues, old friends, and new friends, good morning. It is my honor to welcome you to this first GPFI side event, Moving the Needle, Advancing Financial Inclusion from Access to Usage. During the last 2 days, the GPFI plenary set the stage, highlighting South Africa's presidency priority of moving from access to usage of financial services and products. So we are close, yet a little bit far, because as much as we are now celebrating how far we have expanded access, we also acknowledge that we still need to go further to ensure that we have meaningful usage. Indeed, global progress has been remarkable when it comes to access to financial inclusion. 76% of adults worldwide had an account in 2021. This is up from 51% about a decade earlier. Mobile technology has been a game changer, especially in regions like sub-Saharan Africa, driving millions into the financial system. Yet, about 1.5 billion adults remain unbanked, and even among those who do have accounts, products, and services, many are not actively using them. So although ownership is the first step, or meaning access is the first step, it does not actively translate into active usage. This is the crux of our challenge today and for the presidential year, and hopefully way after the presidential year, we will, as a community, continue to try to foster meaningful usage. South Africa has its own experiences. Just to reflect on this, account access in South Africa has risen dramatically over the past 15 years, thanks in part to policies like shifting our social grant payments from cash to bank accounts. However, usage still remains low. Too often, bank accounts in South Africa are used as mailboxes, so money goes in, then it's out. It's estimated that 13.7 million South African account holders withdraw their money as soon as it lands in their bank accounts. Many factors can contribute to this. For example, economic realities, low incomes and high youth unemployment leave many of South Africans with little to save or little to transact with. Secondly, it could be preferences. Cash is familiar, it's widely accepted, and for many, it's easier to manage despite the risks. Thirdly, trust and safety. Digital financial crime has surged. While most adults have low financial literacy, this leaves them vulnerable to scams such as investment fraud, estimated loss of about $8,600 per scam, romance scams estimated at about $6,000, and moving scams estimated $4,000. These are just among the scams that have been identified. This is according to the 2019 KPMG Global Banking Fraud Survey. Although these scams occur via digital channels, the 2023 World Bank report titled The Global State of Financial Inclusion and Consumer Protection notes that digital financial literacy programs are limited and often too narrow, resulting in poor understanding of the risks and the benefits of digital products and services. So all these challenges, economic, cultural, systemic, they all contribute to the gap between access and usage. This is the impetus of today's discussion. So in this side event, we will try to move beyond the question of How many have access? 2, let's now ask ourselves, what are consumers doing with the access that they have, and how can we help them to do more? The first session, titled At the Crossroads Towards Financial Inclusion 2.0, we ask ourselves a provocative question. Is financial inclusion in Africa as we know it at a crossroads? In other words, where does the traditional approach of expanding access give way to the new approach of deepening usage and ensuring real impact? After years of focusing on opening accounts, onboarding new users, we must now address the user's new experience, moving them towards financial inclusion. Does that mean counting the number of bank accounts or mobile banking only? I don't think it does. We are now moving towards assessing how consumers are using financial services and products on a daily basis, and whether these services truly improve their lives. Another question is, are customers able to save for emergencies? Are they able to borrow for their businesses, invest in education, protect themselves using insurance? Do these financial services reduce poverty and vulnerability? These are the deeper outcomes that we are seeking. So Africa has seen tremendous gains when it comes to access, thanks in part again to mobile money, through which millions of previously unbanked individuals can now send or receive money. But now we stand at the crossroads. Hopefully by the end of the day, we will know which way to go. That is next steps requiring that financial services that are received are of a high quality and are used to their full potential. The second session will turn us to the nuts and bolts of usage, which is transforming financial access with inclusive payment systems, the role of DPI, digital public infrastructure. If we want individuals to use financial services, those services must be convenient, affordable, and universal. Inclusive payment systems are the backbone of an active financial system. They connect people, businesses, and governments in the flow of money. Our panel will discuss how we improve the payment system, how we use the shared digital infrastructure to transform access into usage. The third session will highlight a vital principle. What gets measured gets done. So for us, we need to measure financial inclusion now with a gender lens. We know that access and usage often differ by gender, and that women in many countries face additional barriers to fully using financial services. In this session, we will reflect on why and how can we incorporate gender disaggregated data in our measurement of financial inclusion progress. But it is not just about access gaps. Even when women have services and products, they may use them less and for different purposes than men. For example, social norms, lower income, mobility, product designs that do not meet women's needs can limit usage. For instance, if women are less likely to own a mobile phone, mobile banking solution inadvertently serves more men than women. Using a gender lens, we explicitly track these differences and design policies and products to close the gaps. The last session, Consumer Protection in the Digital Finance Era, will focus on an issue that underpins something I highlighted earlier, trust. If people do not trust financial services, they will not use them. With challenges surrounding digital payments, the fraud, lack of privacy, data protection, and lack of transparency, there is a greater need for consumer protection in the era of digital payments. Digital consumer protection is therefore required to increase confidence and to provide consumers with a sense of security and trust in using digital financial services. In closing, I would like to quote Ed Ray, a former president of the Oregon State University. He said, "I am going to dedicate my strongest effort to moving the needle in the right direction." Hopefully that's what we will be doing. It's not about me, it's about making a contribution and having an impact that benefits other people. I think that's why we are all here, to move the needle in the right direction, not only for our benefit, not just only for the financial sector's benefit, but for the underserved, unserved customers out there. So today's event is all about moving the needle on financial inclusion from access to usage. We are moving from a decade of primarily measuring access to a future where we measure and we achieve genuine usage and impact. South Africa's presidency, G20 presidency, has challenged us to make this shift. And the rich topics in our 4 sessions today reflect the multifaceted approach that we need to take. Rethinking our strategy, that's now Financial Inclusion 2.0, building the right infrastructure, that's focusing on payments and DPI, sharpening our focus to underserved groups, focusing on the gender, women in particular, and the youth, and safeguarding users, that's consumer protection. So, as Lisego mentioned, I also encourage all participants, our esteemed panelists, and the audience at large to engage. Feel free to ask the tough questions. There are smart people in here that will answer those tough questions. If there is no answer today, an answer will be sought, and we have to answer the difficult questions. Share your on-ground experiences and propose creative solutions. We're not just here to ask questions and debate, but if there are solutions out there, let's share, let's learn from each other. Let's make this an interactive forum where we spark ideas that will turn this entire era into something active of moving individuals from access to meaningful usage. Welcome and enjoy the session. Thank you.
Thank you, Alvina. I think I'm worse than you. I'm paper-based. At least you have an electronic machine that you came with. Thank you for those words. And I hope everyone feels welcome when we are welcomed by the South African National Treasury. Rest assured, we are welcomed. I think, as Alvina said, we are close yet a little bit far. And I hope that at the end of the session, we will have figured out how do we get a bit closer and not too far. I'm going to now call upon Prudence Ngwenya, the Director of the African Union Commission's Women, Gender and Youth Directorate, to join me and welcome our esteemed guests today. Prudence.
Good morning, ladies and gentlemen. You are paper-based. She was using a laptop. I'm using my phone. So technology for women. I'm really honored to be standing here in front of you. And as already introduced, my name is Prudence Ngwenya. I am from the region. I'm from the beautiful kingdom of Eswatini, but I'm based in Ethiopia, which is the capital of the African Union Commission. The programs that I lead look after women and young people. And I want to say this, and I specifically took off my glasses. I can't see with these glasses far, but I can't see here if I don't put them on. So it's a very tricky situation. But I wanted to just start off by saying that and reminding you, and particularly the people who do work on the continent, that the current statistics, the demographics of the continent currently are such that over 70%, at least 72% of the current population is young people. So it's people less than the ages of 35. That's 75% of the population. Now, out of the total population of the continent as well, over 55% is female. Now, what that means is that 85% of the population currently, you are either a female or you're a young person. But what it also means is that most females are young people and most young people are female. I didn't confuse you there, huh? Okay. So I'm saying this so that as we think about what we are talking about and all the programs for the continent, we should understand that our target population, and Agenda 2063 speaks to making sure that the continent is people-driven. So if we're speaking about people and people of this continent, 85% of them is the women or the young people or the young women. So that's what I wanted to say just to start off, so we know who we're dealing with. Let me go to my notes and start by appreciating the National Treasurer of South Africa, the Women's World Banking and Finmark Trust for convening this timely and critical discussion. I also wish to commend South Africa's leadership in the G20, and as well as ensuring that financial inclusion, particularly women and young people, remains a global priority. Ladies and gentlemen, if we are to move the needle on financial inclusion, we must first ensure that we are addressing it from a place of clarity and shared understanding. And I think I already started speaking to you about the demographics. But let me go a little bit further just to paint the picture for you on what is happening on the continent. Let me also ground this conversation around some principles. At its core, financial inclusion is a fundamental enabler of economic justice, gender equality, and sustainable development. It also determines who has opportunities, access to opportunities, who can build and grow wealth, and who remains on the margins of economic participation. Now, I already said, as women and young people represent approximately 75 to 85% of the African population, are held back, and not by lack of ambition or capability. And I say this all the time, that most of the time you see women are on the margins and young people are on the margin. It's not that they lack ambition or that they're not capable, but the fact that they exist within financial systems that do not fully include them. Today, we're still speaking of more than half of Africa's women and youth remaining financially and economically excluded, with nearly 60% of Africa's unbanked population being women, an alarming reminder of the persistent structural barriers that continue to exist. The African Union obviously has recognized this and has also recognized that financial inclusion is a prerequisite for achieving gender equality and sustainable development, as well as making sure that the continent is people-driven. We have all of the continent's people at the forefront and driving the development of the continent. So this is why our blueprint for development, which is Agenda 2063, is clear around Africa's development must be people-driven, harnessing the potential of women and young people. The vision is not just aspirational. It has been a guiding principle for our actions. And to ensure that we're taking the right actions, the AU strategy for gender equality and women's empowerment for 2018 to 2028 has set out clear commitments. One, we want to de-risk banking and trading for women so that financial institutions actively expand credit and investment to women-led businesses. We want to formalize women-led enterprises, enabling women entrepreneurs to access financing, markets, and trade opportunities. 3, we want to recognize and value unpaid work, which remains one of the greatest barriers to women's full economic participation. Now, building on these commitments, in 2020, the African Union declared the decade, and when I say the African Union, I mean the heads of state. They come together twice a year, and every time when they come together, they make important decisions based on where the continent is moving and where it hurts the most. So in 2020, they declared the decade of African women's financial and economic inclusion, 2020 to 2030. And this decade was mainly to accelerate efforts to dismantle systemic barriers, accelerate policy reforms, and drive meaningful financial access across the continent. To this effect, an accelerating roadmap was developed to increase women's participation and leadership in mainstream economic activity, particularly through the African Union's Women and Youth Financial and Economic Inclusion Initiative, WIFI 2030. It prioritizes fundamentally reshaping how financial services are designed, delivered, and scaled, and focuses on 3 things. 1, increasing income of women and young people by supporting entrepreneurship and advocating for parity in employment. Secondly, promoting financial sector reform to make innovative financial products and services available, accessible, and affordable to women and young people, and expanding access to digital financial services and mobile banking. The third one is to implement inclusive microeconomic and growth-enhancing policies that enable micro, small, and medium-scale enterprises to survive and thrive. Esteemed partners, the WIFI initiative is a bold mission to mobilize $100 billion, and I said $100 billion US dollars by 2030. And we should at least reach over 10 million women and young people across the continent. The effort seeks to build a resilient continental ecosystem through a public-private women and youth partnership with a key focus on the women and the young people. To ensure that this impact is achieved and sustained, we have set clear goals defining what our success will look like by focusing on empowering 10 million women and youth with the necessary skills, access to financial tools and support systems, including training in financial literacy, in agro-industry technology, entrepreneurship, business management, where at least 80% of women and youth are enrolled in insurance schemes and with access and efficient usage to e-banking services. However, these objectives cannot be pursued in isolation. They must be embedded within broader economic frameworks that promote inclusivity and sustainable growth. Now, so what it means is it's built as an ecosystem. It's a partnership framework where we're bringing together different partners to basically track progress and say, are we really reaching the women and how many are we reaching? So each one of us has a role to play in driving this transformation of Africa's financial landscape. So there's a role for governments, there's a role for financial institutions, there's a role for the private sector and for development partners to accelerate financing mechanisms that reach grassroots in an impactful and scalable approach. The policies are in place, and then I want to conclude by saying this, and I want to say it boldly, specifically from a policy-making institution like the AUC. We have a lot of policies, a lot of beautiful policies. They are there, they're in our cupboards, they're in our laptops. So we have a lot of policies. They're already in place. We have frameworks. They've already been established. We have commitments. We have political commitments from our heads of state, and they've made all these commitments, and everybody knows where the problem is. What remains is the execution, the actions that will transform the lived reality of these millions of women and young people across the continent. As this will be the focus of the upcoming sessions and conversation, I look forward to the discussions ahead, and I'm confident that we will lead to be bold, innovative, and most importantly, actionable solutions as we discuss today. I thank you very much.
Thank you, Prudence. I tried to bring my phone. It didn't work. I will remain paper-based for the rest of the day. As you heard from Prudence, women exist in these financial systems. I'm one. Prudence, I'm not the ones that you spoke about, though I'm not young anymore. But they exist in these financial systems, but these systems currently exclude them. And I think key to the conversations that we're going to have today is making sure, how do we ensure that those systems start thinking about women as well, and how do they incorporate them? Without wasting time, I'm now going to call upon Jörg Vollenweider. Jörg, I had to practice your name 10 times. So I'm a South African and I speak Setswana, and that to me looks like Jörg, and that's what I was going to call you, but I had to look it up to make sure that I call you the correct name. Jörg is is the head of macroeconomic support unit at SECO. Jörg, over to you.
Thank you. And actually, since arriving in South Africa, I'm getting used to the name Jörg, so I consider an official name change. So you might be surprised, but Switzerland is lagging a little bit in digitalization, so my notes even didn't make it to my iPhone. So okay, good. It's very great to be here, and dear partners from the South African government, colleagues from G20, colleagues from Women's World Banking, Finnmark Trust, esteemed stakeholders present, guest speakers and panelists. Please allow me to expand a little bit on what the previous speaker told you about the women's perspective, or the gender perspective on financial inclusion. At Switzerland State Secretariat of Economic Affairs, we support gender equality not only because we see it as the right thing to do, but because it's smart economics. Working towards gender equality and closing gender gaps is a major driver for economic performance and ultimately to foster sustainable development, which is at the core of our mandate. So despite their economic potential, the reality is, and we heard that before, that in many countries, women are still excluded from access and usage of financial services. So let me quickly tell you why I'm very glad to be here for this meeting in South Africa. South Africa is a long-standing partner to Swiss Development Cooperation, and hence it is no coincidence that many of the organizations present here in the room are partnering with us in promoting financial inclusion with a gender lens. For example, we are working with the South African Financial Sector Conduct Authority on consumer protection, which closely links to financial inclusion for women. Likewise, the National Treasury is our main partner when it comes to supporting the country's financial inclusion policy and strategy, which is a key instrument in integrating female participants in the market. Finnmark Trust, to continue the list, is a local implementing partner to us under our financial inclusion and digitalization programs with the World Bank and the South African Reserve Bank. And then, of course, there is Women's World Banking, the co-host of this event, and a long-standing partner as well to us. Providing leadership training, advice and policy design and implementation, and the fostering of a policymaker community network, SECO and Women's World Banking jointly aim to strengthen gender equality in the financial sector. Let me highlight two of our key intervention areas which are particularly relevant for today's agenda. First, for financial sectors to expand and gain in stability, we need to increase financial inclusion and literacy of women. A recent policy paper by our partners of Women's World Banking points this out very nicely. As credit risks of women are on average lower than those of men, financial inclusion of women not only leads to a stronger and more developed financial sector for greater participation, but also through improved asset quality. And secondly, regulators need to tailor financial sector policies according to gender implications to strengthen women's financial inclusion. Let me give you an example for this from a concrete program with our partners. In 2024, SECO and Women's World Banking supported both the Egyptian Central Bank as well as the Rwandan National Bank in delivering a women-centered product design workshop for financial sector service providers based on robust evidence gained from interviews with local underserved women. Financial service providers were then being asked to use a tool developed by Women's World Banking for self-assessment to report to the regulators their progress in implementing women-centered product design. Like that, a dual approach of gathering both qualitative and quantitative gender disaggregated data will enable the regulators to track concrete results among the financial sector players and advance women's financial inclusion in these countries. So therefore, and referring to the first and the third panel, I'm very much looking forward to it as these topics are hopefully covered there. So fortunately, today's event doesn't just stop there. In identification, including through solutions as digital IDs, is an important element as well. And I'm very much looking forward to hear about this in today's second panel on digital public infrastructure. As you know, the share of adults without ID is highest in low-income countries, where more than 1 in 3 adults lack an ID. And again, and you're not surprised, there is a gender gap. As in low-income countries, according to the World Bank, 44% of women compared to 28% of men lack any kind of formal ID. So this is a challenge we need to address as well. Finally, I'm very eager to learn how we can address some of the challenges in consumer protection in the fourth panel. Let me give you another example here with a gender lens. In the realm of agent-based mobile money, it's important to consider gender-based risks, and we heard that before to a certain degree, as women are more likely to be sexually harassed by local agents in case they have to inform them about their mobile phone number to perform mobile money operations such as a credit top-up. So let me conclude with a personal experience I made yesterday in a West Pretoria township. And it doesn't directly relate to financial inclusion, but I will explain why. We have been with a project of us, and they supported the communities there in managing their waste, sanitation, and water. And I was very impressed to see how the community engaged voluntarily in addressing these issues and was able to engage the local governments to provide the necessary services they did not before. So how does it relate to financial inclusion? Well, I was most impressed by the motivation and the potential of each and every person in this community to drive change. The only thing they needed was an opportunity to do so. And I think here, this is the moment where we are called upon to provide these opportunities, and we can be sure then people will grab them. So you see, there is a lot of work, and as SECO, we stand ready to continue our support here and in South Africa and beyond. And looking at the audience of today and the panels filled with very knowledgeable experts and all these influential institutions present that have a common objective to work towards financial inclusion, also with a gender lens, I'm convinced that together we are able to move that needle and advancing financial inclusion, particularly for women. Thank you.
Thank you, Jörg. Now I see where you got the Jörg name. You were in a township yesterday. It makes sense that you got the Jörg name from a township. Thank you for those words. I think I agree. Gender equality is smart economics. And I think it's important that we recognize that in order for us to get women to participate, the sector, policymakers, regulators need to think about how do we ensure that the sector is more inclusive. Talking about an inclusive sector, we're now going to move to our first panel of the day, which will be led by Brendan Pierce, the CEO of Finmark Trust. Brendan, if you can join us. Brendan will be joined by his panelists, Eric Masinda, CEO of FSD Tanzania, Gerard Kutsie, independent consultant, formerly from CGAP, as well as Eselina Makome, CEO, FSD Mozambique, and Chair of the Standard Bank Mozambique. Please give them a round of applause.
Thank you very much, Lesego. I was a bit worried about bringing my iPad up here after the comments from all the women that went before. In case you think I take all the resources and give Lesego a piece of paper to work from. These are my panelists for the session. I was in the GPFI plenary over the last 2 days, and I saw something very interesting. They had a big timer up on the wall, and everybody had to cut off at 2 minutes, and it ticked off as you talk. So I think we need to use that here, that you have 2 minutes. I think there's a timer, so the responses need to be within 2 minutes. But thank you very much. My job today is to be provocative, as Alvina says. The title for this session is Financial Inclusion as We Know It at a Crossroads in the African Context. It's an important question. It's not just an academic question. It's an important question because if we are not able to show the impact and the contribution of financial inclusion to SDG outcomes, poverty development outcomes, we may lose the attention of policymakers and regulators. We have fought hard, particularly in this region and continent, to raise the profile of financial inclusion. When I started working at Finmark, showing my age, close to 15 years ago, financial inclusion was not considered a policy priority at all in this region. And today, it's a policy priority in most countries in the region and on the continent. That was a hard-fought process we went through. Now we need to make sure that we can show what the contribution is. If we don't do that, we're going to lose ground for financial inclusion. So it's not just an academic debate. Financial inclusion has gone through many stages, evolutions over the last 3 decades or so, starting off with credit, microcredit. And initially, microcredit was the main focus of it. We, after went along learning from these processes, that microcredit alone does not contribute sufficiently to people's well-being, and that people's financial needs go beyond microcredit. And so the financial inclusion as we know it now has broadened out, looking at other aspects, banking, insurance, transaction, savings, and that's was the next phase or iteration of financial inclusion. There are many questions that are being asked currently in the global financial inclusion world about whether we are doing the right things around financial inclusion. CGAP has done some work on pathways, looking at resilience as a pathway and opportunity as another pathway, to try and make sense of how does financial inclusion contribute to people's well-being. The FSD network, of which Finmark is part, and FSD Tanzania, FSD Mozambique, is a part of a network of 10 financial sector deepening organizations on the African continent that work together with their regulators, policymakers, as well as the private sector. And we've been doing this for more than 20 years now. They have come up with this idea, and through the research that we've done, looking at and beginning to conceptualize the next evolution of financial inclusion, which we've been calling Financial Inclusion 2.0. There's also other streams of engagement and thinking around it. So the concept of looking at financial health as a much broader way of looking at what financial inclusion means for people. The UN agency, I think Queen Maxima's office, looking at how do we construct financial health and measure it, is also another way of asking the same question. In the GPFI plenary over the last few days, I heard many times the questions about quality, what's the quality of inclusion? And of course, the theme is about moving from access to usage. I'm even asking, is usage what we should be asking about? Or should we be going beyond usage and saying, what is the contribution that financial inclusion makes to people's well-being? Even if they use it, it doesn't mean that it's contributing positively to their well-being. And there are reasons why they're not using it. Let's not assume they're just not using it because they don't like it. They are not using it for a purpose, for reasons, and very valid reasons that we need to understand better. So, with those introductory words, what we thought we'd do first in this panel is to have a quick look at what is the data telling us on the African continent. We're data-driven, we're evidence-based organizations. Let's start with the data. And we'll have my colleague, Dr. Kingston Mutsunziwa, who is the head of our data program at Finmark Trust, and he will do a short presentation, a snapshot of it. You have a longer presentation in the QR code that you will download. There's more, there's the full presentation is there. He will just give us some highlights. Please welcome Dr. Mutsunziwa. Are you going to stand here? The timer, that's the timer there.
Good morning, everyone. I'm going to be very quick. I am based at Finmark Trust, and we do a lot of data work. And as a data person, what we tried to do is to look at the different surveys that we have done, and we have mined quite a lot of information. And we came with about 30 slides, and I have about 10 minutes to go through those slides. But I will try just to point out a few issues. Just before I go into this presentation, can I say all protocols observed? And we have titled this session, Empowering African Economies Through Data-Driven Insights. And what are the insights saying about the different data points that we have? So we are really going to look at our FinScope surveys, which we have implemented in different countries. I will show you the footprint. But in particular, we are just going to have a look at, what are the gender dynamics in terms of this data. But we are also going to look at the account usage. We are also going to focus on financial digital services, the impact of financial health and food security. I'm happy that we have already started talking about financial health, the key risks, including climate risks, and very quickly, just one slide on insights on MSME lending. So in terms of this presentation, I thought I might not have enough time to go through all the slides. So what I have just tried to do is to summarize the findings or the slides. So one of the most important things that in this data, I have used data from the FinScope's 26 countries that we have implemented, the FinScope surveys. But what we find is that formal account ownership and digital financial services have increased quite a lot. But in that increase, what we have seen is that the drivers is mainly mobile money. So this is one key point that we have seen. And whilst we are saying mobile money is driving formal account adoption, we also see amongst women that the banking uptake is actually been declining. And why it is declining is that we see the usage of non-banks increasing. And what we also finding is that account ownership has increased, whilst we find financial health and food security is declining. We also look at household risk incidences, they are increasing. And what we also important is that as Finmark Trust, we have started really measuring what we call financial inclusion 2.0. So very quickly, in terms of the countries that we have implemented the FinScope surveys, these are the 26 countries that we have implemented, but outside Africa, we have also implemented FinScope surveys. And we think that in the next 10 years, we are going to cover the entire African continent. What is important to note here is that for FinScopes, we are able to do cross-country comparison. So, for example, in the SADC region, we have done that. And we do have an instrument that we call, indicator that we call financial access strand. And what this is telling us is that we still find a lot of financial exclusion, especially this area which is highlighted here. And what is also important is to realize that the yellow part, which is the non-bank financial usage of products, is actually been increasing. And this is what we have seen across the different countries that we have seen. But we have also found the increase of informal mechanisms. And this is very important. But if we also look at other countries where we have trended data, we actually see that there is quite a dramatic increase in terms of other formal products. And here we are just trying to paint a picture about women comparing to men, and we have found that in terms of women, there is definitely a gender gap, and that gender gap points us that women, they are still disadvantaged in a number of products. So here we find, for example, the use of informal products and also the use of other formal non-bank products increasing in the women's space. And this is the picture that we see, for example, if we just compare, we see the yellow part actually increasing quite dramatically. This is where we are comparing different surveys that we have implemented in these countries, and also informal mechanisms increasing. So in terms of usage and access, like we said, we see the uptake of products not being a problem now, but what we are finding is that the usage, there is still a gap, and this is what we are finding. For example, the usage of merchant payments is still much lower than just comparing the uptake. And in this picture, again, if you look at mobile money and banking accounts, we find that it has been increasing over years. But if you look at, for example, South Africa, I think it has been mentioned that there is really quite high levels of dormance in this case. So there is a lot still to be done in terms of the usage is still lagging behind. The next slide that I'm just going to touch on is in terms of formal inclusion, it has been increasing quite dramatically, but what we find is that, for example, food security is still on the low side, so there is still a lot to be done there. Brendan has talked about a concept of financial health, and this is how we have actually been conceptualizing financial health, and there is other frameworks that has been developed. And as Finmark Trust, this is what we have been implementing since 2016. So we are looking at these 4 pillars. So in terms of the results itself, we actually see that whilst financial inclusion has been increasing, but we find that financial health has not been increasing. There is actually quite a lot of information that we need to dig into to understand why is that financial health is still on the low side. And unfortunately, it's not just looking at formal inclusion. We need to understand why is that there is still people really struggling financially in terms of what we are seeing there. And in this slide, we are just trying to profile in terms of those people that are vulnerable, who are they? And this slide is actually trying to look into how do we target the different segments that we can look into. So this is exactly what we are just trying to highlight here. We also find in terms of the main risks that are encountered, there's quite a lot of risks that we find when we dig into our FinScope surveys. for example, illness, death, or funeral of, it could be the head of household, and any other risks that we are finding. So there is definitely some risks that the different people can actually encounter. And we also find the climate change related aspects increasing quite a lot. For example, heavy rains and floods, pest infestation, drought, water scarcity, it has been increasing, and soil erosion. So these are really some aspects that we have picked in our FinScope data. And very lastly, I just want to point a picture that we have implemented what we call FinScope MSME service as well. So what I was presenting earlier on is based on the FinScope ordinary consumers. These FinScope MSMEs, we have implemented them mainly in the SADC region, but we have also implemented in Haiti there on the other side. So this service, they really touch in terms of our real economy issues, what we want to really try to understand. We have talked about financial inclusion 2.0. So I do have a slide that really paints a gap in terms of borrowing. So this is really saying in terms of the MSMEs, there is a gap in terms of accessing money to run their businesses. And what we find is that these MSMEs, they tend to rely on informal sources of money to run their businesses. That means that there is definitely a gap, and there is a lot that needs to be done to support these MSMEs. So I think with 15 seconds to spare, I can stop here. Thank you so much.
Thank you very much, Dr. K. You made it in time. I put a lot of pressure on our data team to shorten. They can talk for the whole morning about their data. Thank you very much. We'll go into the conversation now with our panel. And once they've done, we'll open up the floor for questions and comments from yourselves as well. As I say, we flew through that data presentation. The longer deck is you can access it through the QR code. But I think just to focus in on two aspects. One of them is when you look at formal inclusion versus food security as a proxy indicator for well-being is the one. The second one is when you look at financial health and you compare financial inclusion versus financial health, there's a big disjuncture between those two. They're moving in different directions. And the question is, what is this telling us, and how should we interpret what is happening here? I haven't come across many people that have said financial inclusion is a panacea to all social ills in our society. But certainly in the way we implement our programs, we pretend that that is how it works. So my panel, my first question, Eselina, I'm going to start with you in the middle. You're the only woman on this panel. How should we be interpreting this, given all the work you've been doing in Mozambique? Eselina.
Yeah, thank you, Brendan. Thank you, Brendan, for this question. I think it's a question for ongoing reflection. It's not a question that you can say that we have a specific answer. But going first to see this direction of what the data are telling us regarding financial inclusion and also the well-being and also the relation with what in the end of the day that financial inclusion means for the people, because financial inclusion, if it doesn't have a means to the quality of life, to the well-being, will not mean anything for us. So I think we need to see to what extent what we are doing in terms of financial inclusion is interlinked or is directly linked with the real life. And it is that notion that within the FSD network, some years ago, I think it was already 4 years ago or 5, that we started to discuss and we come up to the issue that we need to move to financial inclusion 2.0, which means that we need to bring financial inclusion to the economic life. So for me, or for us at FSD Mozambique, it is important, yes, to have an increase of the bank accounts. It is important to have an increase in terms of mobile money access, but then we need also to see the usage, but mostly usage for what? Because you can use not for the proper things, and then you end up with what now today we're discussing in terms of financial health. So it is really a question that we need to have. So for me, it is also that we are seeing a lot of problems, for instance, in Mozambique, in terms of financial health. We see now financial institutions making some restriction in the usage of the credit cards, in the usage of the amounts and the transaction that people that already have access, that not using in the proper way. That one is a signal that there is, yes, a problem in the financial health. And the financial health, we're now seeing mostly in the issue of the consumer, but we need also to see in terms of the climate change, because I can be healthy today, but then suddenly I enter in a situation that I cannot cope with the situation, and I end up in that one. So it's why we see this deviation of data, because those components are also in move, and we need really to be that one. I want, before finishing your first question, to highlight what was coming in the opening remark regarding gender. I think it's very important. In our continent, in each of our country, women and youth represent the majority. We need to look properly, how are we really designing products that really address the issue that are going to help them for the well-being. If we manage that one, and now I'm talking also in the background that I have working in a financial institution, that is important that the banking system, the bank industry, they really understand what is the need. It's not just an issue of making money, but we need to help people to move to the second level for their quality. And I am one of the belief that if people that can move, that can improve, they're going to use more, and the banking industry is going to make more money. In the end of the day, we're going all to be in a prosperity. Thank you.
Thank you, Eselina. Eric, what's your take on this? I mean, is part of the problem that we didn't start at the right place? We didn't start from a demand side to get a sense of what do people need. We started from looking at how banks and MNOs can deliver better, and digitization, which is the new word all over. Does that contribute to why we've arrived at this place now?
Thanks, Brendan. I don't think there's an easy, there's an easy answer to that. I mean, as with all things, you have to, you have to start somewhere. So, so for even to piggyback off of the example that you gave, you started with microcredit because, back, one of the issues that was identified was access to finance for businesses and things like that. So, but I think as it should, it's a learning journey as you go ahead. So, every intervention starts with, with the best of intentions. So there's no one easy answer to that. But I think when I looked at the data and I realized Dr. K didn't present the entire presentation, but I'd encourage everyone to look at it. It's really interesting. One key data point that stood out to me was if you look at the measurements of financial health and then looking at the different categories, which is you're either financially healthy, you're financially coping, or you're financially vulnerable. If you look at, if you look at the graph, I don't know if we can put it up, but most, and I think it looked at 4 SADC countries, most people, what it shows is that most people are either financially coping, which means you're living basically day to day, or most people are financially struggling. So which means at any given point, you are one crisis, one job loss away from, from moving, down across that continuum. It also, kind of speaks to me about, the nature of, like the structure of the economies in sub-Saharan Africa and how inclusive they are. Because often you would like to see that if the economy is more inclusive in terms of livelihoods, then the contribution of the financial sector towards the growth of the real sectors, you would see that sort of correlation. For me, what it comes down to is, if we've gotten this far in terms of access, meaning everyone can access financial services, but as Selena said, for what? Do financial services actually add value to the lives of of those segments that we're trying to serve? And I think a lot of times in our different hats, whether we are financial service providers, policymakers, development practitioners, as we're designing programs, policies, and products, we forget that we are consumers of financial services too.
Yeah.
But very often when we go into when we go into our spaces, we often try and think of how do we develop this in a way that meets our objectives and not thinking about are our objectives aligned with everyone else's. So the question there to ask is, are financial services providing enough in terms of value to drive usage? And this sort of speaks to the appropriateness of these financial products. There is a lot of emphasis that has been placed on credit, but if you go back to that continuum where most people are either financially coping or financially vulnerable, and you're seeing, oh, you can take out a loan for this much digitally instantly. For someone who needs to put food on the table, they're going to take that not because they can pay it back, but because it they have to fulfill a particular need, but not realizing that by taking that product, you're actually you're actually making yourself worse off. So it's also looking at going back to the appropriateness of financial products is, have we been placing too much emphasis on credit, not realizing that it can actually have a harmful and detrimental effect, where maybe we should be placing more emphasis on, savings products and investments that can have the potential to help people navigate that continuum between vulnerability, coping, and financial health in a positive direction and not oscillating between one and the other. Another data point, I'll draw from Tanzania. If you look at the volume of credit to the private sector, it's really hovered around 4% over the last 10 years, and most of that is in personal loans. This also speaks to the high degree of informality within our economies. So if you're seeing a lot of uptake of personal loans, it's because they're very often the most easiest to access, but a lot of that is actually disguised as, what you're not seeing is that a lot of that is actually disguised as credit for business because it's the easiest to access, but is it actually productive credit that enables you to grow? So this is kind of what, and maybe the last point that I'll bring up is, when we talk about, someone earlier raised the point about financial and digital literacy. I think one thing we all have to admit, even for those of us in this room and those, and and people who are educated, financial services are complex. I mean, if you look at the broad spectrum of financial services, even for me, who I have a financial economics degree, but some of these products can literally blow your mind. Like, you have no idea how to navigate them. Now, if you draw that comparison, like that analogy with the fact that most, that most of our people are rank low in terms of financial literacy and digital literacy, how are financial services supposed to work for these people? And even in the way financial services are communicated, which is mostly in English, you have, in Tanzania, our national language is Kiswahili and English, but there's there's loads of other dialects, and I can imagine it's the same in in the rest of the SADC region as well. So how are we communicating financial services to people? And if they can't understand them, if we ourselves who are privileged and learned, can barely navigate them and still survive, how do we expect everyone else to? So I think, again, if I had to now bring it back to that analogy I drew between that we are all consumers of financial services, I think for me, point blank, if financial services offer value, if something offers value, you will use it. If it doesn't, you won't. And I think those are the questions that we need to ask ourselves going forward.
Sure, thank you very much, Eric. You raised the issue about the negative impacts of financial inclusion that we've seen in South Africa. Over-indebtedness, consumer debt is a serious crisis in our country. I think it's so big that we don't even talk about it anymore because we actually don't know what to do about it. And so I hear lots of celebrations about credit you can access digitally, and those are achievements. I think in other parts in East Africa, the over-indebtedness problem is creeping up. And I think if we don't pay attention to those negative aspects, we're going to be in trouble. Gerard is a consultant now, he's a free man, but he spent more than 11 years at CGAP. So I wanted to get his perspective on this as well. Obviously, CGAP works globally as well. I mean, one of the things, Gerard, that I struggle with when I look at the financial health indicator is where does incomes fit into that? Can we talk about financial health without talking about incomes? If you have an income, that already means, of course, you could be irresponsible with how you use your money, but that is such an important factor for financial health, yet our measure doesn't look at that. Sorry, Gerard, I know that is a curveball. I thought I would put you on the spot, but I know you know how these things work. Thanks, Gerard.
Thanks, Brendan. And it's thanks for the invitation. It's good to be here and see many familiar faces and many new faces that I just don't know. And I had a life before CGAP. It was spent for 30 years in South Africa before I left. So now I'm back and I'm looking at this in a different way, because and I'll answer your question, I'll try to answer your question just now, but my worry is that we have become so enamored with financial inclusion that we want to try and solve the world's problems through one instrument. And the reconsideration by the FSD network a couple of years ago, and CGAP asked us in 2015, financial inclusion for what, is something that we ask, but we don't really act on it. So for me, the question is, are we not burdening financial inclusion with many other problems? And should the people in this room be more than financial inclusion people if we have this discussion? Should there be people that think about agricultural development, think about small business development, and we are part of that because we are burdening ourselves. We are actually setting ourselves up for failure. Now, I hope Brendan will ask me another question about solutions. Because
that's the next question.
I'm not a doomsday kind of person, those of you who know me. But looking at the financial inclusion world and the data that Kingston rushed through that we should actually spend hours on, it seems to me that we are doing very well in building access and even usage, right? But we are also seeing people walking away from financial products, people going to informal products. Now the non-bank there is probably digital. So you can see people moving from bank products to digital products, and especially women. Fascinating to me because it may be that they have more agency using something on their own, and I love that. I mean, we should focus on that. But the point I'm making, without trying to make too many points, is that firstly, financial inclusion can't solve everything. Secondly, we have to think about why people are voting with their feet. And we have to understand that. And that means that we have to ask a very simple question to the people, not to the policymakers, not to the regulators, but to the people, exactly where you started off with your opening speech. What do they want? And we'll come back to that. On your financial health question, the financial health conversation started probably 15 years ago in the US by what is now called the Center for Financial Health, or the Financial Health Network. I can't remember their name clearly, and they've done wonderful work. But 1.5 billion people, thank you, Alvina, reminding us about that, don't have access to formal financial instruments. Are they in bad financial health? Well, we would argue yes, because we have not blessed them with our presence. Right. So financial health is a function of many things. And once again, let's not burden financial health to be the ultimate indicator. And my last observation is, this function of many things is where we should put our attention. Right, because today I can be in perfect financial health. I get hit by a car, I can't work anymore. Tomorrow I'm in bad financial health. Overnight.
Thank you very much, Gerard. So we'll go into the second question now, about how do we move forward? It seems like there's the next evolution around financial inclusion 2.0 beginning to evolve. What does that mean for how we need to be working and what we need to be doing? So I know FSD Network, as part of their process, is saying we need to have a stronger demand side focus on this, so that we make sure whatever financial access is enabled, that it solves and answers some of the questions, not on its own, Gerard. I think that is an important point, that this can't solve all the problems. But the question is, how do we then go about implementing it in a way that doesn't set itself up for failure? Eric, I'll start with you, Selina, and then we'll go that way. I'm giving you more time to think about the answer. Yes.
I was thinking that was my time already.
Well,
Eric.
What if I needed more time to think? I'm just kidding. I think if we, I think if we go back to looking at what's sort of been the biggest driver of financial inclusion, it has been sort of mobile money, but specifically digital, like embracing digital platforms and digital financial services. So I think it's time to now think of how we make, integration of different digital platforms more, sort of more meaningful, and interoperable. So digital public infrastructure, so looking at IDs, payment systems, and data exchanges, and looking at how DPI can help to deepen integration between financial sector stakeholders and players, to allow for data sharing and concepts such as open banking, open finance, that can give financial institutions a holistic view of an individual and of a business, so that you can actually be able to serve them better. I think development of additional use cases that are appropriate and actually add value for whatever target segment you're trying to serve, whether it's the MSME segment, a farmer, or even an individual. But the key is to drive adoption and usage through a value proposition rather than compliance. Meaning, if I'm a farmer and I need to get paid, I'll open up a bank account, money will come in, guess what? I will cash it out, and hey, see you next season. But if if that bank account or that mobile money wallet can offer me additional value, then it makes sense to actually keep, keep my money in that account and actually use financial services. I think there was when we looked at the FinScope survey in from 2023, and we did a deep dive, there was another research institution, I think called IPA, that kind of ran some trials where they covered the costs for cashing out for a particular sample size of customers. And what they actually found, early results, were that because there was no cost to cashing out, the money actually stayed in the in digital format, basically, for a longer period of time, and no one really rushed to cash out. So I think policymakers also have to continue to work on addressability barriers, so IDs, mobile phone access, internet network penetration, costs of compliance, as well as consumer protection. I think financial and digital literacy is a real thing. Going back to the problem the thing that I mentioned earlier about financial services being complex. in the in the development world, like thinking about the common sentiment, I think is, well, we can't really measure the effectiveness of financial literacy campaigns and things like that, but if someone doesn't know how to use something, they're not going to use it. So, you're basically left with sort of a Mexican standoff. So I think digital and financial literacy has to be rethought, and how you actually meet people where they are. So whether it's using things like social media and TikTok, or to sort of drive home digital literacy and financial literacy initiatives, but we really need to start thinking outside the box, because as the data shows us, most of our people do not have these skills, and for them to interact with financial services in a meaningful way, this is something that needs to be tackled. I think one last thing is also tackling informality through a values-based approach rather than a compliance-based approach. I'll give you a story, a story of my own country, where I think between the years of 2012 and 2015, there was a very friendly face on the revenue authorities, where they would actually say that these are the benefits that will accrue to you if you register and you formalize, and we try to streamline the process. And that and that sort of started to drive formalization, especially in the MSME segment. Post 2015, with the government that came in, there was a very different face that was sort of placed on it. And since then, the messaging has been, you need to comply because of this, and this. Meaning, it's more like a stick that this is why you need to comply, as opposed to this is the value that will accrue to you. So I think even in terms of thinking of how you drive formalization, which will then push more people into using financial services, it needs to be done from a value-based proposition as opposed to a compliance one.
Thanks, Eric. I think you need to come and speak to our own government in South Africa around.
I hope I'm not being
around
recorded,
this issue.
by the way.
That's very good. Eselina, just briefly, and then Gerard, and then we're going to open up for some questions.
Okay, thank you. Just to add, I fully agree what Eric was saying in terms of integration. Just maybe to give an example what we did in Mozambique, because it is important to see that in order to solve those problems, will not be solved in a separate way. We need to have the consumer, we need to have the provider, but we need also to have the regulator and also the facilitators. And I'm just giving an example of a product that was designed based on the needs. And sometimes we find that some financial institutions do not design a product oriented to the needs. And then we as a facilitator, we bring this way of thinking. And at the same time, we identify also that the policymakers, sometimes they do not define a policy based on how they're going to enable the end user. They are more linked to the compliance side. So I think here there is a need for a shift in changing. The second thing that I think is also very important is the digital components. And here digital skills is required for all of us. And we cannot say that we're in the digital era and at the same time we want to regulate or want to perform as in the previous. So how do we really make a citizen of this era? I'm stopping here to give opportunity to others to put questions to us.
Thank you very much. Eselina.
I'm going to be very quick and just make 5 statements. The first statement is, let us avoid making a mistake over-focusing on health and measurement and all those things and forgetting that we can only reach those objectives if we make sure or ensure that we understand people on the ground, we deliver what they need, and it adds value to their lives. You said value many times. And then the second statement is we should, when we do anything in financial inclusion, we should do it through the lens of empowering and bringing agency to women, because that is actually the gateway to many others, to impacting on youth and many other objectives we have. Third statement, are policymakers supporting us in what we do? You said 15 years ago, no financial inclusion, now financial inclusion, but we have financial inclusion strategies pouring out of our ears. But do we have the political will to implement them? 2016 SADC financial inclusion policy, we are in 2025, and it's not been fully implemented. In fact, I think they assess about 70% has been implemented or are being considered. So we are failing on that. We need the political support, and to get the right political support, we must know how to influence policymakers with our evidence. And I've got two more quick statements. Last one, regulators. Are they doing enough to protect customers? Is protection only about protecting against harm? What about ensuring that there is value for customers by regulators? Which means that we should think about outcomes, outcomes-driven regulatory approaches, right? And the last question is, we are operating in a system, in an ecosystem, and therefore we must make sure that all the players in that ecosystem that can bring benefit to low-income and poor people, to women, to people who suffer from climate risk, that all those players are in our camp, that we interact with them, that we speak to them, that we collaborate with them.
Thank you very much, Gerard. Okay, we have an opportunity for questions or comments from the floor. Are there any comments? We'll take a few. I've got 1, 2, 3, 4. We'll go from left to right.
All right, thank you and good morning. My name is Leona Tugade from the Reserve Bank. I just have probably just 4 comments. The first one is that I think the major thing that we are challenged with as South Africa is the issue of high unemployment rate. And I'll tell you why. So if I am going to have regular usage, if that financial service or product, right? In fact, the regular usage itself is a consequence of whether that financial product or service talks to my needs today, now, right? So that's the first layer. The second layer is that the truth is that people don't have money. Yeah. People don't have money. And it is very difficult to, and Mr. Masinda speaks about it so beautifully, it is very difficult to talk to somebody about saving when they are grappling with survival issues. Mm-hmm. What are you going to tell them? So that's what we are challenged with, and we need to start thinking about how do we balance these priorities, because the NDP talks about financial inclusion, but as Mr. Kotsia says, financial inclusion is not going to solve our poverty issues. Financial inclusion is a contributor towards dealing with issues of poverty. So that's the second one. And then probably on the third one, and maybe we'll have this conversation about small businesses a little bit later, but it got me thinking as I'm sitting here, that, and Mr. Kotsia also mentions small business development. We need to have this vision to say, what can we do to assist the small businesses? Because research shows us that the small businesses contribute to dealing with issues of high unemployment, especially for the youth. If we assist these businesses in order for them to grow, they then appoint more people, and then we start talking about balancing issues. So this is the third one. And maybe the last one is to say, you know, we think about, even for small businesses, we think about credit and debt financing as the solution. Yet the research shows us that we need to start thinking about equity financing for small businesses, because equity financing is going to drive the high growth in SMMEs, and we need this. if we are to talk financial inclusion, then we need to start thinking about these things. So those are just the comments that I have, that maybe we need to start to stretch ourselves a little bit. How do we do things? Because, you know, financial inclusion is very broad. We need to also think about what happens 10 years from now. What kind of a state do we envision 10 years from now? So I think these are the things that when we think about them, we need to just think about them holistically. Thanks.
Great, thank you for those inputs. I'm going to reintroduce my 1 minute cutoff for questions and comments from now. Lundell at the back. I'm coming to you, Kashia, and Felicia at the back.
Thanks, Chair. Good morning, everyone. My name is Linwell Clark. I'm Head of Financial Education at the Financial Sector Conduct Authority. And thank you to the panel for those insights. And I agree with you, Gerard. Just as financial education is being seen as the panacea, I also don't believe that, as well as financial inclusion, is the answer to all our problems, because we sometimes think if we implement financial inclusion strategies and financial education programs, then we will solve our problems. But I agree with you, and I also agree that we need to look differently, Eselin, to how we actually integrate all of these things in terms of financial education and the others. My two questions, one is around, you spoke about, Brendan, you asked about income versus, and the lady before said people don't have money. And globally, we're looking at financial resilience as 3 months salary that you have. But if you don't have 3 months salary, how do you measure that? So that speaks to financial health. So my question is, what is this? How do we then measure our financial health or our financial well-being, for that sake, if people don't have money and we don't take into account, because the elephant in the room is also always the socioeconomic circumstances of people. Do we take that into account when we do all of this assessments that we are doing? The second question is, you spoke about our policymakers doing enough. How do we actually then, as a collective, lobby governments or policymakers to actually implement these great policies and strategies that we have? Because while it's good on paper, sometimes when we translate it into the implementation phase, it fails the people that we're actually aiming it at. So just how do we actually get to that point? Thank you.
Great, thanks. I had Kashia there, and I think that's all we have time for. I see another hand popping up at the back. Kashia, and then I think Felicia at the back.
Thanks very much. Kashia Singh, also from the South African Financial Sector Conduct Authority. I head up the policy support team. And a lot of this conversation on financial inclusion and kind of moving it beyond access and considering things like, in the GPFI, there's focus now on looking at how do we measure usage, this conversation now about how do we measure financial health. It brings to mind a lot of the conversation we're also having on the sustainable finance topic, and that is, how can the role of the financial sector contribute towards better societal outcomes? How can capital be directed in ways that contribute to better societal outcomes? And I just wanted to echo some of the points that were being made about this being a multifaceted problem, and it's really difficult to see one intervention resulting in massive, broad-based changes. I think it's still really important, though, to be measuring these things, like the financial health dimensions of that FinScope now sets out, and how vulnerable are consumers. The FSCA is also developing a consumer vulnerability framework. How do financial institutions deal with vulnerable customers? And what outcomes are we expecting from their interaction with customers? But I guess I just wanted to re-emphasize that point that, the financial sector and the ecosystem in the financial sector is one aspect of a much bigger landscape and ecosystem. I think it's still really important to be measuring those things, even though we know we may not be the ones solving for it and directly contributing to reductions in, security, because financial security, because that is a consequence of employment levels going up. But to keep the finger on the pulse of, this is what consumers are actually facing, this is what the struggles are, and trying to kind of galvanize broader focus on addressing those. Thanks very much.
Our final comment or question, on the floor.
Thank you, Brendan, and thank you to the panelists. I am Felicia Dlamini from the Central Bank of Eswatini. I always say financial exclusion is a symptom of an illness, and it's mostly structural in nature. I think the first intervention was that we have high unemployment. High unemployment is also a symptom of a fundamental issue. Mm-hmm. So the work we've done on financial inclusion has put the illness on the table. The challenge is, how do we implement this? It has to be a value proposition. Mm-hmm. You know, both the supply and the demand side should be sitting at the table and addressing the issues. From a financial sector perspective, we tend to provide products. You know, I had a conversation with my financial sector teams, and they were saying we have products for women. And then we engaged the women, and they said, that thing is not for us. You know, they haven't considered A, B, C, and D. So we have products that are not used, we have demand that is not met, and we have policies that we keep crafting that are not implementable. Mm-hmm. So there is a time where we all need to sit together and say, who has to drive what? And the political will, it's all of us. I should be willing to trade something in the regulatory space for the provider of financial services to fill that gap and the user to see the benefit. It's very difficult. You know, my king always says bureaucrats are good at creating structures. And then the structures intertwine themselves, and we expect the leaders to untangle us. So the people that create the complexities are the very people that should simplify it. Thank you.
Great, thank you very much. I'm now in trouble with the MCs. I can't take any more hands. They've told us we need to wrap up because we are behind time. I think that's what you said, Lesego. A lot of the comments are valid, and I'm not sure whether we need to answer or respond to any particular ones. I think you've echoed a lot of the conversation and the questions. Nobody has answers to these questions. So I will stop here, but I think this is an ongoing conversation. And there are a number of key issues that are coming through around making sure we understand what people need, not assume what they need, not to design products. You know, my favorite saying from that movie is, let's build it and they will come. I'm not sure if you remember that Hollywood movie. So you build it and then nobody comes to take up your product. The other issue is, and I think I like the way Gerard put it, is let's not load financial inclusion and set it up for failure because we wanted to solve all of the problems. But what that means practically, so the question for me is, how do you then work if you don't, to avoid that? And it's about how do you partner with other institutions that also have a role to play in making sure people livelihoods are improved, people get jobs. That means you need to work, don't need to be singing to the choir ourselves all the time. Financial sector regulators, that's what we do. We need to be talking to agriculture people, to small business people. At Finmark, our work has changed over the last 3 years as a result of 2.0. We're working with institutions we never thought of working with before. Mm-hmm. The Department of Social Development, SASSA, you know, just so that we work with others to bring the solutions in a more integrated way. The issue about incomes, the question we need to answer is, yes, financial inclusion is not solving the income problem, but what is its contribution? And how does that contribution happen? Those are the debates that we need to be happening, we need to be having on an ongoing basis. Because as I say, we risk losing financial inclusion as a key policy intervention if we can't demonstrate that there's value here and that it adds to the key challenges society is grappling with. Thank you very much to my panel. Please give them a hand of applause. I will hand it back to the MC.
Thank you, Brandon, Eselina, Eric, and Gerard. That was insightful. I think from this we all it's clear that we can't do this in isolation. We need a holistic approach. So you can't say we're going to move the needle to the SA presidency. That needle won't move unless we look at it from a holistic approach. I'm now going to call upon the next panel, Transforming Financial. The title of that panel is Transforming Financial Access with Inclusive Payment Systems. What role does digital public infrastructure play? The moderator for that session is Robert Karanja, Senior Director, Africa, Co-Develop. He will be joined by Pradeep Maharaj, Chief Operating Officer, South African Reserve Bank, Stephen Lindell, CEO, BankServe, and Louis Mansour, HOD, Financial Citizenship, Banco Central do Brazil.
Good morning, ladies and gentlemen. All protocols observed. And a warm welcome to my panel. I think we're just waiting on one more colleague to join us. So we're actually meeting in person. All four of us are meeting in person for the first time today. So Stephen, you and I will need to chat over coffee at some point. So I'm joined on the stage by Pradeep Maharaj, who will be joining us in a minute, the Chief Operating Officer at SARB, Stephen Linnell, CEO of BankServe, and Luis Gustavo Mansour Siqueira, Head of Department Financial Citizenship at the Central Bank of Brazil. So while we're waiting for Pradeep, I'll just take a couple of minutes to set the stage for this panel before I join my panelists on the floor. So DPI, or Digital Public Infrastructure, as we know it, and sorry, my name is Robert Karanja from Co-Develop. I should have introduced myself, is revolutionizing financial inclusion through the improvement of access, affordability, and efficiency via digital IDs, mobile payments, and interoperable financial networks. We do have global models like Aadhaar and UPI in India, M-Pesa in Kenya, and PIX in Brazil, which we'll get to hear more of today, which showcase DPI's power in expanding banking access and enabling real-time transactions. It would be remiss of me as a Kenyan not to speak about M-Pesa, so I will talk about M-Pesa. The case of M-Pesa, launched by Safaricom in 2007, we all know that it has revolutionized financial inclusion across the continent, with over 66 million active users who benefit from secure mobile transactions, savings, credit, and remittances without the need of traditional banking. In Kenya, mobile money adoption surged from 27% in 2006 to over 84% today, providing low-cost financial services, particularly in rural areas. It has been especially transformative for women, enabling financial independence through secure savings, microloans, and business investments. A study by MIT found that M-Pesa has helped women-led households to escape from extreme poverty, while services like M-Shwari and KCB M-Pesa, Kenya Commercial Bank M-Pesa, provide crucial working capital for entrepreneurs. That all sounds like very good news, but we still know that challenges do exist. The regulatory framework is quite fragmented. Interoperability is an issue. Cost of even use is a challenge in some countries. Cybersecurity risks threaten trust, while digital literacy gaps hinder adoption, especially among vulnerable groups. 742 million women globally are financially excluded, and 44% of these women are in low-income countries. They lack formal IDs and inclusive policies, which are critical to prevent DPI from widening inequalities. So how then can we maximize DPI's impact? Collaboration among governments, regulators, and financial providers to build trust and ensure interoperability and drive inclusive adoption is key. Strengthening regulations, leveraging gender disaggregated data, and adapting successful models such as UPI and PICS can enhance accessibility. And then again, investing in digital literacy and tackling socio-cultural barriers will empower marginalized communities. And this will foster financial resilience and accelerate progress towards the SDGs. So I'll join my panel and we can start going through some questions, and I'm glad Pradeep has arrived.
Hi, Pradeep.
My first question is for Pradeep. And I'll seek your indulgence. We did not plan or design this to be a manual, right? So I do want to apologize in advance, and we'll just proceed with the questions as they are. So my first question is for you, Pradeep. As a regulator, as central banks are taking on expanded roles as scheme owners and hub operators within payment schemes, they are uniquely positioned to drive sustainable and inclusive DPI. How would you say the regulators can proactively modernize DPI to expand financial inclusion while ensuring secure, resilient, and innovation-friendly digital ecosystems, particularly for informal MSMEs, women, and migrant populations who face systemic barriers to financial access? Sorry for the long question.
Thank you, Robert. I suppose for us, the first thing is Eric said it earlier, what do we mean by digital public infrastructure? And for us as a central bank, we think about this as digital identity, a mechanism that provides for a trusted and verifiable set of credentials that can be used for a whole range of activities, not just financial activities. So that's the first. The second then is digital payments, because it's something that everyone that is active in the economy needs to have options for how best to transact and exchange value, whether it's cash or whether it's digital. And whilst cash is ubiquitous in this country, it's very widely used, we don't have sufficient options for digital payments. The products are there, but the usage is not there. And so how do we provide for digital payment activities to grow? And the last, of course, is data exchange. How do we allow for, in a secure, trusted way, with the requisite consent for data to be exchanged, so that you create a middle mile set of infrastructure and a platform that provides the necessary but not sufficient conditions for financial inclusion? And I think for us, those are the three things that as a regulator, we need to start to more proactively put in place to create that foundation for a greater level of financial inclusion.
Thank you very much, Pradeep. Stephen, I'll come to you as a market actor, and I think this is an opportune time to ask you this question, because back in Kenya, we're having very vigorous discussions on what a national switch should look like. And there's so many discussions going on, some which I can speak about and some which I can't, right? But as a market actor, what's your view on transaction costs? How do high transactions costs remain a major barrier to financial inclusion? They do impact MSMEs adoption and low-income users. And how can private sector financial services, such as BankServe, leverage digital public infrastructure to create a more cost-effective financial ecosystem? that will reduce transaction fees and enable affordable, accessible digital payments for businesses and individuals at scale.
Thanks, Robert. I mean, first off, I'm very pleased to be on the stage before Pradeep. I arrived at the Maslow Conference Center at 9 o'clock this morning, and I walked into the room, and there's beautiful colors all over the wall, and there were these very pretty looking boxes on each table, and I thought this was a real step up for a financial conference. Then the moderator came up, and I only then realized that I'd actually walked into the National Decoupage Convention, and that I was sitting in the Santon Maslow and not the Pretoria one. So hopped on the highway and just made it here on time. But very glad to be here nevertheless. I think in answering your question, I'm going to go back to the intent of the DPI and specifically the role that someone like BankServe can play. So as Pradeep has sort of given a definition of a DPI, we really see it as the digital equivalent of what the roads and the railways would be in the physical world. And so they are the foundational infrastructure upon which other activities can take place. Now, BankServe Africa, which is the continent's largest payment clearinghouse, is far more akin to a national utility today than it is to a commercial enterprise. And so it really proves as a really important foundational step in the payments vertical of what Pradeep described as sort of the three pillars needed to be provided. The latter two pillars, the financial identification, is a critical component, and luckily the South African Reserve Bank has kicked off a DFID initiative. Equally, and it was touched on in the previous panel, is the need for sort of a data communication layer, and I think that's particularly important for where we will eventually advance to in terms of open banking and open finance. So these really are the foundational layers, and I think when one does provide that, one's also acknowledging that those services are in the true sense a public good. And so they're not typically well provided by the market forces in and amongst themselves. And so there has to be some other catalyst to bring that to bear. But once that is there, I think that's where the private sector really has both the opportunity and the obligation to participate. And sort of you start seeing this innovation layer built around the core infrastructure that can bring the competition, that can bring transactions cost down, because you at least have open access at a common price point for all market infrastructures. So I think back to your challenges in Kenya, we have exactly the same here in South Africa, and a lot of it is talking to where that switch starts and ends, and where you get to services that can be provided by the market in a competitive dynamic, then that's the natural place to stop. And so that's the journey we're on.
Thank you, Stephen. So, Louise, I'll come to you. PIX, I've heard so many good things about PIX. And so really glad that you're here to speak to PIX. We know that PIX has led to a significant increase in digital transactions in Brazil. And how would you describe the key drivers behind PIX's success? And how can other countries replicate its model to enhance financial inclusion, particularly among low-income populations?
Well, first of all, I'm very glad to be here, very honored to be attending the first plenary under the South African presidency, and I'm also very glad to be invited to participate in such a high-level panel, so thank you very much. So the success of PIX has been really remarkable. It has changed the way Brazilians interact with the financial system. I'm just going to give some statistics to you. In 2024, 75% of the Brazilian population used PIX. In the same year, PIX processed almost 64 billion transactions. And on the 2024 Black Friday, PIX set a record with 240 million transactions only on that day. So, but one common misjudgment that people make about PIX, and I would say not that people make about digital payment system, about open finance, and about DPI, for that matter, is that those are kind of silver bullets for promoting financial inclusion and usage, and they are not. In the case of PIX, its success is not a result of itself, but a result of a series of public policies that were put in place starting back in 2003 when we started our agent banking system and regulation. So we took advantage of the digitalization of the financial system, and we issued a regulation that enabled this environment. In 2013, we introduced a payments law, enabling the entry of payment institutions into the market, and that fostered competition. In 2016, the central bank allowed the opening and closing of accounts electronically, so that was a game changer as well, because you didn't need to be physically present in a branch to open or close an account. In 2018, credit fintechs were introduced into the market. So, and then finally in 2020, PIX was launched. So by the time PIX was introduced in the market, we had this ecosystem already ready for its implementation. We had a favorable infrastructure, a more competitive environment, and the population was really eager to use a digital financial system. In addition to this favorable ecosystem, I believe that PIX had some embedded successful key features that helped it be the success that it is. First of all, it's instant, it works 24/7, it's cost-free for individuals, it's simple, easy to use, it was born integrated into daily lives of people, so people did not have to download an app or to go to our website to register. They used their bank's application that were known by them, and so that made life easier. One very important key feature, that participation was mandatory for large financial institutions, so they were obligated to introduce PIX and offer PIX free to individuals. Interoperability, so PIX works across all banks and fintechs, so this makes digital payments seamless. And a very important thing is that PIX was implemented in a phased operation, so that allowed us, the regulator and the financial system, to gradually increase the adoption of PIX and make the necessary adjustments. So in terms of other countries replicating this model, I mean, it's obvious that there is no one-size-fits-all approach for digital payment systems, but based on our history, I would say that successful digital payment system should have three basic features: should be very simple, cost-free, and mandatory for large financial institutions so that they can offer it freely to the population.
Thank you very much, Luis. And I'll just build on your response to that question and ask you, so what happens next? And what is the future of PIX?
So PIX is continuously evolving under that phased approach that I just mentioned. So it's a gradual evolution. So our objective is to make it increasingly more integrated into our daily lives. Let me mention what is in the pipeline for improving PIX. First one, automatic PIX. So it will enable recurring payments of subscriptions, utility bills, without the need to the user take an action every time. Another development that I consider very important is contactless PIX. That would work both online and offline. So by working offline, it will help promote financial inclusion because you don't need to have internet connection to use PIX. That's very good. The other thing is that it will also be, it can be used with any NFIC device, so a card, so you wouldn't need a cell phone to use PIX or to make a PIX transaction. I think this is very interesting. PIX credit is also on the agenda. So the central bank has been working on defining the rules for cases in which credit is provided for a PIX transaction. This has the potential to function as an alternative to interest-free installments in the purchase of goods in Brazil. This is a very common practice in Brazil, to pay for goods in free installments. So we are trying to implement that in PIX. In terms of security, we've been also working a lot, and we're working on that. So we are now evolving to trace PIX transactions beyond the first receiving account. So this will allow us to reduce frauds. So I think that the main message here is I think the success of PIX is that it also, besides all the things that I already mentioned, I think it tries to replicate the Brazilian traditional interaction with the financial system, like the installment payment. That's something that is traditional to Brazil. So in this way, I mean, as it replicates the Brazilian behavior with the financial system, I think it drives and increases its success. So I think this approach we'll continue to use this approach to focus on this phased evolution, and this will make PIX a successful tool and dramatically reduce the use of cash. That is something that we are also pursuing in Brazil, to reduce the use of cash in financial transactions.
Thank you very much, Luis. Pradeep, I'll just come back to you for a minute, and looking at South Africa's role as a key hub for remittances and cross-border trade, particularly in SADC. We know that the financial sector may possibly face some regulatory misalignment that limits seamless financial flows across the SADC borders. So how would the central banks, such as the Reserve Bank, collaborate to establish harmonized DPI frameworks that can enhance interoperability, reduce transaction costs, and create an inclusive, frictionless cross-border payments ecosystem that would benefit both small businesses and migrant workers?
I suppose you've touched on it. I mean, there are several factors that inhibit seamless cross-border transactions in our region today. Some of it you talk about: regulatory misalignment, high transaction costs, foreign exchange and liquidity constraints, and a fragmented in-country digital and financial ecosystems, and very, very real for South Africa is we do rely largely on a very established banking sector. And so we can start to address this by harmonizing our DPI frameworks so that we can enable seamless cross-border transactions, largely at 5 levels, and this is the things we are focusing on as a SARB. How do we align regulatory frameworks? By standardizing licensing, know your customer, anti-money laundering kind of requirements, so that we can reduce compliance barriers for small businesses, migrant workers. And in this regard, how do we open up the payment system beyond just banks by looking at activity-based regulations and risk-proportionate compliance measures that allow others to come in? The second is, how do we enhance interoperability by adopting common payment standards like ISO 20022 and such like, so that we can integrate our national payment systems to allow for real-time, low to no cost transaction, especially in the fast payment system. It has to be no cost to compete with cash at the point of transaction. How do we strengthen connectivity between the digital payment infrastructures? So how do we interlink fast payment systems across borders for broader utility and financial inclusion? One of the key things is we need to have a more coordinated approach to foreign exchange management, where we can include settlement mechanisms that reduce currency conversion cost issues and allow for smoother transactions. And lastly, we have to foster public-private partnerships that will drive innovations and competition. If we continuously rely on the banking sector, we don't quite take advantage of the innovation that fintechs and other non-bank providers bring to the party, and to allow for a more inclusive and a more efficient cross-border payment ecosystem. By taking these steps, I think we can enhance financial access, reduce costs, and promote economic integration as well.
Thank you, Pradeep. So, Stephen, I'll bring you into this conversation. So we do agree, that cross-border payments in the region have remained fairly slow, sometimes perceived as costly and maybe fragmented, so limiting trade and financial inclusion across borders. So how can BankServe leverage DPI, for example, to modernize regional payment systems, ensure seamless interoperability, faster settlements, and lower costs, while aligning with initiatives like the Africa Free Trade Continental Area?
Well, the goal of the free trade area ultimately is to increase interregional trade and transactions. And for that to occur, one needs an efficient cross-border payments network, which unfortunately we don't have, certainly at an Africa level and increasingly in the sub-regions. And so if we take a slice of that and we look at the SADC community where we operate, and it is home to over 400 million people. It accounts for about 40% of that Africa trade component. But it's also home to probably the world's most expensive corridors for trade. And it's very far away from the sustainability development goals of, say, a 3% cost of transaction. So what the SADC central bank governors have done alongside with Banks of Africa is we have launched a regional payments system called TCIB. TCIB is an open platform. I mean, it is, as Pradeep mentioned, built on ISO 20022, but it is specifically open loop, so it enables parties from each of those countries to participate in. It's also a multilateral solution. So unlike, I guess, what you see today in most corridors where you have this infinite number of bilateral interactions, which make it very hard for new entrants to come in and bring scale and ultimately bring down costs. So this scheme allows participants to join a single network and have access to all the corridors that exist within that SADC community. So we believe that through TCIB, it will ultimately lower the cost of access to real-time payments across those regions in a similar way to what Nexus is trying to do at the moment in the Asian regions. And the benefit sort of through these regional DPIs is that you also get to network them. And so sort of the next step on that journey would be for TCIB to link up with other African regional payment DPIs such as a PAPS. And then ultimately you just have this interconnected loop of multilateral DPIs across the continent.
Thank you, Stephen. At this point, I'd like to shift to the audience for any questions, comments to the panel.
Gerard Kutsia, reasonably independent. I have two questions. When Louise said that there are three basic criteria for PICs to work so well and for payment systems to work so well, he mentioned free of charge. Now, it seems to me that the people in South Africa didn't hear that because here they charge. They charge heavily for those transactions. So my question to my South African counterparts is, in what way do we have a roadmap decreasing the costs of our pay sharp or whatever we call it? So that's the one way, because I think that's quite important to reach deeper down into the more poor and more people that could benefit from the system that we've put together. And then the second, I'm sorry that I'm now focusing on Stephen and Pradeep there. The second question is, will the banks in South Africa really allow other people to come and play in the playground?
I suppose both of those, less to do with Stephen and more to do with me. The first thing is we have acknowledged as a SARB that public good interest and commercial interest in the long run do not sit together. In the short term, there might be a crisis that brings those parties together where their objectives are aligned. But in the long term, public good and commercial interest do not have aligned objectives. And for that reason, the SARB has taken the step to establish a national payment utility for the country. Because we can invest for the public good without a commercial objective. And it's not a secret. The SARB is looking to become Stephen's boss. Because we believe that we could use Banks of Africa as a foundation to develop and build a national payment utility whose sole objective would be to invest for the public good so that you can have a fast payment system that is at zero cost to the end user and low cost to the participant. So the participant should not pass on that cost to the end user. So that's the first thing. And we're quite far advanced in that work, where the SARB will become an active participant and the operator, and not be left to the private sector. In that regard, we've got a national payment system bill that provides that kind of framework to enable that. The second is we have just published for comment an exemption notice and a licensing framework for payment service providers, which is open to all payment service providers, where you can balance access with stability. Right? So it's a risk-based, proportionate framework that will allow for us to license non-banks to provide payment services on a common platform. And then the next thing is we were looking to introduce a whole range of interoperability standards, starting with the QR code for payments, to enable the fast payment system to play a more powerful role than it has, because PayShap has not seen the adoption, and it's really only largely displaced other payment rails rather than displaced cash. And the last one is that we are developing a DFID, a digital financial ID system, to underpin the fast payment system. And we're making a decision to appoint a service provider. We've run the POC so that we can start to build digital ID system that will be used in a trusted and secure manner to authenticate and verify people and entities for payments. So this notion that the banks will not allow others to play in the backyard, well, we've long past that. We actually have published the licensing framework for comment with the intention to license non-banks before the end of this year, and to have digital financial ID up and running before the end of this year, so that we can drive this no cost to end user approach to the fast payment system.
Robert, I mean, I'll add to what my soon-to-be new boss has said. I mean, I think almost the key takeaway I have is that to offer a public good in this way, you have to act sort of an countervailing mechanism to the entropy in the system that is in place today, because it is servicing a different agenda. And so you need a catalyst for change. and this is where Pradeep talks about the public entry into public DPI services. But I think what's also unique in the way South Africa is approaching it, and I think it's been incredibly tough over the past year to get to that point, but I think will stand the test in time, is that invariably one has to fully acknowledge the ecosystem of players, and to some extent the rent they seek to remain economically valuable in the market. And so what the SARB is doing through BankServe is a public-private partnership as well. So there's co-ownership but co-accountability in delivering each leg of the chain. And I think that's quite unique. It's not just sort of a implicit partnership, it's a structural one. There's co-investment into the public infrastructure to deliver what must be delivered in the short run. So I guess there's no squirming out halfway through the journey. Everyone is in it for the long run.
Thank you both. Louise, would you like to comment on that? Yeah, go ahead. Go ahead.
Very quickly. Well, I think to be cost-free, I'm not very familiar with if South Africa has a payment system, but it seems that it has one that is developed by the private market. So that will never be free. So to be free, it needs to be like PIX, the core system of PIX was developed, is under the control of the central bank. So there was no reason for the banks to charge for it. But hearing Pradeep explanation, I think you are on the right path. You are building the infrastructure within the central bank and the regulations so that you can develop a public digital payment system. So I think that you are just on the way of paving the groundwork for your digital payment system. And about allowing other players in the market, I also heard Pradeep saying that you guys are past that decision, right? That's was the same in Brazil. So obviously, the large banks didn't like the introduction of payment institutions and fintechs, but we moved it forward, and now we have a very competitive financial system. So I think South Africa is right on the right track.
It's very hard to be compared to PIX.
Yeah, and just your responses to that question triggered something in my mind. So, co-developed together with ITU, UNDP, and the World Bank, will co-host the second edition of the Global DPI Summit in Cape Town this year, November 4th to 6th. So, I do want to extend an invitation to Pradeep and Stephen. I'm sure you'll have made some significant progress on the approach that you've just taken us through. And it would be wonderful if the rest of the world can also hear what South Africa is doing. So I will share an invitation. Any other questions? We have a few minutes. There's one at the back.
My name is Kagiso Dichabe from the FinTech Association of South Africa. Actually, I have two questions, one to Stephen and another one to Pradeep. Maybe the first one is what role can BankServe and the SARB play from financial services passport point of view, especially within the region? Basically, if I have a specific license in South Africa and also considering TCIB and certain rails that we have, is it possible to use the very same license, considering that you have the relationship with other central banks, to actually go and operate in another country, like Mozambique or Tanzania or within the region? That's one. And then the second one to Pradeep, it's more around the pre-funded settlement account, especially for fintechs. How, or let me say non-banks, how can that benefit the end users, especially from a costing point of view, to have the pre-funded settlement account? Thank you.
Thank you. I think if I understand the first question, it's around effectively passporting beyond sort of your domestic region into broader Africa in this case. And I think it talks to my earlier comment on TCIB. The way we have established that has both a technical and a rules-based extensionality. So what I mean by that is the rollout plan is that one would connect as a participant to PayShap. PayShap as a scheme would then itself connect into TCIB, and TCIB itself would then either connect into other regional schemes or have bilateral relationships with other countries. And so as a participant of PayShap, you have the technical connection as a point of entry, and you don't need to then join, at least physically, any of those other schemes. You have access directly through the network effect from that one jump point. So that is the build-out goal, and I think it talks to the layering of DPIs. There's a domestic DPI. That DPI gives you access to regional DPIs. That regional DPI gives you access to multi-regional DPIs. So that is the goal. I think we're in really on the formative stages of that, because the domestic sort of faster payment system, PayShap, hasn't itself yet scaled. I think we've seen a lot of rail migration, but not sort of new penetration into the cash-based economy. That's the first goal. I think the second goal then is how do you give those domestic participants access to initially CMA-based transactions, but thereafter multi-currency inter-Africa transactions. So it has a logical rollout plan, but we're not yet there.
Okay, so I think you're asking a question that is most in the audience might not understand. Pre-funded settlement model. What we've designed as part of our licensing framework, proposed licensing framework for payment service providers, is to give them access to the payment system directly. And you do that by a pre-funded settlement model that allows for clearing and settlement to take place in real time in order to power your fast payment system. And so a payment service provider can apply for a license and can access the payment system directly themselves through a pre-funded settlement model. What that says is that we're giving you exemption from the Banking Act because you're taking deposits. Right? A store of value, if somebody is putting money into a wallet that you hold on their behalf as a service provider, you're taking a deposit, which means you must have exemption from banking to do that, and under certain conditions. What we're asking is that that money be placed in a trust account which funds a pre-funded settlement model that allows for transactions to take place, to be cleared and settled in real time in the name of the payment service provider, rather than go through a bank. Because right now only banks have access to the payment system for clearing and settlement, for settlement especially. And I think that's bringing that closer together so that you have real-time clearing and settlement. Of course, that will come with conditions. And the conditions are to balance access with stability. Because if you're providing access to the payment system and you're holding wallets on behalf of people who want to transact, you need to create stability in the system. And so that's trying to balance the risks related with that, hence the pre-funded settlement model and the conditions attached to it.
Thank you. MC, I'm looking at you. I have one more question, but I think we're out of time. Can I take the question or the comment? Yeah, one. Last one, please.
I'm Kim Dancy. I represent a company called Yoko. We look at enabling payments for SME merchants in South Africa, essentially. My question, perhaps to Stephen and to Pradeep, is in terms of this new framework that you have put forward, has been put forward by the SARB, are you including merchant payments in that framework, or are you looking at P2P payments? I'm a little concerned on the values that I've noticed. To understand the South African market in terms of merchants and the merchant acquiring framework, one would definitely want to be looking at numbers higher than the current values. So I'm a little concerned if it's directed at P2P payments or P2B and B2B, which I don't necessarily see come out of this framework, and I think is very important for the discussions we're having here. Thank you.
Yeah, I think it's a great point. I think if you look at what has happened in PIX and UPI and all of those, they follow sort of a sequential roadmap. And typically it starts with P2P payments. It's the most obvious and most simple use case. But if you stop there, then you actually cannot penetrate the ecosystem. And so the rollout plan initially was migration of a store of value. We have that today with PayShap. The next focus would be sort of P2M, so the smaller merchant areas, because again, we're focusing on cash displacement. And there, the current solution is not yet, I would say, sufficiently enabled to suit that market sector. And I think there's probably two areas, one in particular that's holding it back, and Pradeep touched on it. The first is the payment initiation mechanism. Now, having to sort of go into your bank account, find the right screen, hope that the counterparty is registered is quite frustrating and doesn't emulate cash, which is dominant in that sector at the moment. So it won't displace it. So the first step in that roadmap, and we have now published the scheme for it, and the SARB will be publishing the mandated statement, is the interoperable QR standard. So I think that's the first trigger point for really being able to penetrate the P2M use cases. The second leg, which is now live, is request to pay. So that allows a merchant to initiate the payment call request. And the combination of the QR code and the request to pay feature, I think, will then unlock P2M. I think as you get into, let's say, e-commerce and multi-lane retailers, you're sort of at the third leg of the journey, and you start competing head-on with credit card type transactions, and that's never been the goal specifically of PayShap. So it's definitely at the back end of the journey, but it is certainly in the foreground of our minds. And there's a couple of blocks that we have to respond to first, being the current interchange model doesn't support that type of activity. So one would need a reverse interchange model whereby the merchant is effectively paying on behalf of the customer, first point. Second point, you would want, as mentioned in PIX, you would want zero fees for the customer in making those payments. And so you shift the commercial model onto the merchant. And then the last one is mostly in rapidity of transaction. I think this is where you need the NFC enablement, the virtualization and tokenization of the capabilities to allow very quick transactionality. Luckily, PayShap is built on an ISO 20002 rail, so the richness of the data is there so that the merchants are able to manage subsequent reconciliations and their own processing. So I think the long answer to your short question is really you start with P2P, that's where we are at the moment. We're now live with the request to pay, and we'll go live with QR codes over the course of the next year that enables P2M, and then fully the multi-lane retailers and e-commerce will come about after sort of NFC enablement and reverse interchange modeling. Pradeep, I don't know if you want to add anything else.
I mean, our licensing framework is activity-based, so it doesn't limit itself just to P2P. And from a SARB point of view, as we establish this NPU, one of the things is to fast-track the build-out of the full fast payment solution that goes all the way to G2P, P2G, and every kind of different transaction types that currently occurs in our economy. We are working very closely with the Presidency, the Treasury, and DHA to look at finding a solution for grant payments. I mean, there's 20-odd million grant recipients, SASSA grant recipients in this country. The efficacy and the cost of that today is a challenge, and we need to find a long-term solution. So the fast payment system must allow for all of that. Yeah.
All right. So thank you very much to my panel, and thank you to the audience. Please reach out to any one of us if you do have any direct questions at the break. Thank you.
good morning to all participants present here, the GPFI delegates and G20, and congratulations to the Republic of South Africa for being the host. Before my panelists get frazzled, it's about measuring financial inclusion with a data lens, not transforming financial access with inclusive payment system as it's shown on the screen. So don't get puzzled at the moment. Just as a start, I think it's important that we recognize why we do what we do. As growing up, just as an icebreaker and as people are walking in, when I was growing up, I was told that babies come from airplanes. And I believed it for most of my life. And because it came from my parents, I still believe it anyway right now. But the reality is we are all sitting here and we come from a woman. And therefore, we need to recognize that we need to give effort when it comes to our mothers and our sisters. Not that they need it at times. They are very resilient and very forceful. But it's a reality we face. We all come from a woman, and we must make sure that we don't leave anybody behind. It's astounding to see that we have 1.5 billion people still excluded. And as Liz was saying, from the African Union, 75 or 85% of them are young women or women that are young. So what is it that we're doing? And it continues to show that women in many countries remain disproportionately excluded from participating in various aspects of economic and social development. And this has led to inequality, discrimination, and depriving them of their dignity and freedom and leaving them more vulnerable. I will also then ask myself, where do I work? I work for the Alliance for Financial Inclusion, as Brenda said. I'm based in Côte d'Ivoire, in Abidjan. I am actually from this region. I'm also from the Kingdom of Eswatini, ironically. But as this was being said this morning, I asked myself a question. I work for an organization that is member-led. Everything that we do comes from our membership, and that is in 90 institutions, 42 of which are in Africa. I got a very bizarre question this morning as we were talking. Policy changes, they also need political change. And we've been priding ourselves at AFI to say, over the last 15 years, we've made 1,130 policy changes, and they have ensured that 855 million people are included. But we still have a gender gap, which is still still there. We saw it move in 2021. And we also realized the importance of it and said, in anything that we do in AFI, we will have gender as a cross-cutting theme, youth as a cross-cutting theme, and also forcibly displaced persons as a cross-cutting theme in all of our 7 working groups. I also got a very peculiar breeze of air this morning. We make policies, and my colleague from the African Union says some of them are sitting in cupboards. And it started to make me feel a shiver again. Well, we made what we call the Denaro Action Plan in AFI. And we were very considerate to say this is about gender inclusive finance, particularly. This was 2016. But we were also particular to say, let's review it in 2022. Are we making impact? Is the needle moving or not? And we can't do it on our own. We started working with other partners as well to chart the progress, especially in Africa, to say, are we moving the needle into making meaningful? And we started to explore if we're doing the correct policy changes as well. But that's not the problem that we have. And we saw that actually our needle's moving. In countries like Morocco, 24%. In some countries, DRC. And we did this with the African Development Bank. But I will not look more into what we do. I think it's important that as we sit here, we look at how we got to where we are and where we are going to move the needle. And this is very important because it's clear, I'll just set the context. Over the past decade, there's been significant progress. We've been noting it, movement in the global Findex data, and we're looking forward to this data set to see what has our policy changes done in terms of providing crucial data for sex disaggregated data. I think this is important because everybody is moving together to do that. But is this how we measure our pinch of salt, all of us? How do you measure your pinch of salt? Is your pinch of salt the same for mine? Or is mine bigger or smaller? And what defines how we measure our pinch of salt? But that also talks to how we do things, country context and scenario context as well. Are we actually using the same measurement for our pinch of salt? You could be using a teaspoon, I could be using a spoon, and also I could actually be pinching it ideally as it's supposed to be. But your pinch could be different because your pinch is smaller and mine is bigger. There's so many parameters and variables that need to be taken. We need to focus our issues on access to the usage of quality financial services. As my deputy governor from the kingdom highlighted this morning, sometimes we do policies and products that are not the best fit. So we need to be cautious of that. And it's becoming important that we capture the key aspects of the financial service utilization, which is the people we serve, the quality and the financial well-being. And specifically, we need to take into consideration gender dynamics because we need to have tailored products and services that are appropriate for us. We need to reevaluate and expand financial inclusion indicators as and when it is necessary. Catherine, yesterday when we spoke, you told me that in South Africa you measure married and unmarried, and for me it was like, oh wow, what does that have to do with what I do with the financial system? But it does have a lot to do because the social norms also then come to play a lot. It is important that in everything we do, we always have a gender lens. Not that because it's a disadvantaged group by anything and they can't do it, but because we are being deliberate in what we want to do, leaving nobody behind. I think for the participants here, our session today will debate the efficacy of current financial inclusion measurement indicators. And we will explore avenues to enhance the usage of gender disaggregated data. And then we will make recommendations to our financial regulators and policymakers to refine these indices. This is the background I would like us to have and delve into what my panelists have. I have a very interesting panel with me. I have the Central Bank, the Central Bank of the Kingdom of Eswatini, the Reserve Bank of India, and Catherine from the FSA, Financial Sector Conduct of South Africa. So what do the regulators think is better to capture the quality and depth of financial usage? Rather than just access, what are new dimensions that we should be incorporating into existing measurement frameworks? I will take a seat as my participants ponder, and for the benefit of those using technology, I use both because I need to make sure I'm fully alive to everything that I'm doing. So I write and also use my laptop. But I will start off my panel, maybe because DG, you also sit on AFI's Gender Inclusive Finance Committee. Can I start with you? And because it's easier, because it's home. Thank you.
What's the question? What's the question?
So it's a family debate right now, so.
Okay, thank you, Sharon, and first of all, I would like to thank the organizers for this important conversation, especially at this point where a lot of work has been done on financial inclusion, and we need to take a rain check. Are all the efforts that we've put on the table working for us? And thinking about how we assess that is important. In the Central Bank of Eswatini, we have partnered with government to think about how we look at certain indicators. Most of our structural challenges are in our heads. We have natural bias. We assess risk based on our gut in terms of race, education, gender, and dress code. You know, you walk into a bank and the banker says, this lady is risky because of the way she looks. So it is important that as we implement our policies, we keep checking, and measurement becomes critical. What do you look at? When you do the survey, you find usage is going up, but if you go deep down, it is basically from the payment space, not the usage space. It's more access, it is more payment, different payment products as fintechs come up. So the financial intermediation in terms of the central bank is not really there. Intermediation is taking money from those that do not know what to do with it and giving it to people with ideas of how best to use it. And if you look at the products in the banking system, they're mostly consumption-based. So business support is not there. Investment, large ticket items like property, like other investment products are not happening. We're just consuming. We had that from the first panel. You know, we're only looking at the next paycheck and how to survive in between paychecks. So what we have done is think about the impediments and how you dig that out. You know, we've engaged the women, we've engaged the commercial banks and the fintechs, and we're saying, what is the law? What is the culture? What should we ask? And I think I'll end there for now.
Thank you so much, DG, and it's very important to note that we need to take a rain check and take stock of where we are and to reevaluate what we're doing. I find it also very prudent to note that engagement, don't prescribe, but more of have conversations. As this is also a conversation, Nisha, in the Reserve Bank of India, you have done a lot. Actually, you've made some tailor-made solutions for the people in India. The Sonari program is one of them, Financial Literacy Week. But can you share as well what should we be doing right now? Because we are moving the needle, but how are we moving it? Are we going to make what we need to make in terms of measurement? And the same question to you again comes as posed earlier on. How can we refine our financial indicators to better capture the quality and depth of financial service usage rather than just the access? What new dimensions should be incorporated into existing frameworks? Thank you.
Good morning, everybody, and thank you for this opportunity. I'm very happy to share with you some experiences from India. As you would all be aware, we started out after independence as a very capital-poor country, and at that point of time, it was poverty alleviation which was really the goal, and all of our development programs were really guided by that goal. Over time, we have succeeded in, to a large extent, overcoming this problem, yet it remains a challenge. There is a significant population, given our size of population, even a 10% is a huge population. So we still have poverty alleviation as our goal. Now, as a result of this, our financial inclusion programs have actually grown around this theme. So if you've heard of the flagship program that the Government of India runs, which is the National Rural Livelihoods Mission, this is a program which is basically intended to alleviate poverty by targeting women. So looking at socio-economic indicators as well as economic indicators. And this is a multifaceted program which involves equipping them with skills, connecting them to the financial system, providing them credit, and so on. So in all of this, when we did start out with the access aspect of financial inclusion, the data was designed to capture access and how we were improving on that. So in the central bank, for instance, we have a very extensive system of capturing data. We call it the basic statistical returns, which banks are supposed to file with us on a quarterly basis, which basically covers 100% of the deposit and the credit accounts. And from the 1990s onwards, the gender-based data of these accounts is being collected by the Reserve Bank. But that by itself would only give you a broad picture about how many women have certain credit accounts, how many women hold deposit accounts. But what is the nature of those accounts and how they impact the women, etc., is not something that you would get or you would be able to interpret from that data itself. Subsequently, we have progressed, and now we are looking at how we can further deepen and widen financial inclusion. And as part of that, we have instituted, or rather built upon, our system of collecting data for financial inclusion. And I'm very happy to share that one of the things that we've done in that is to build a gender element into that data collection process. This is a system that has just started. We had a system earlier, which was where gender-based data was not emphasized so much. Now we are moving to a system where we will focus on gender-based data. We have also widened the collection of this data to cover all the entities in the banking system. In India, we have a variety of entities with different levels of sophistication. So you have the regular commercial banks, including the public sector banks and the private sector banks, a few foreign banks as well. We have small finance banks, we have payment banks, and we have cooperative banks, who we call the urban cooperative banks, and we have the regional rural banks, state cooperative banks, district central cooperative banks. Of these, the smaller banks are generally not as sophisticated as the regular commercial banks. So they typically fall in the cooperative sector. But what we've done this time is we have expanded our data collection to include all of them so that we have universal data when it comes to the banking system. And I'm sure that we will face challenges when it comes to the quality of the data, but that is a problem that we intend to address as we go along. We want to basically first put in place a foundation to see that data comes in. And what is this data that we are seeking from them? Credit related, this is on usage specifically. We are looking at credit data in terms of the number of accounts as well as the amount involved. We right now do not have a segregation as to the type of credit facility, but that is something that we can possibly build as we go along. But broadly, it is different kinds of credit facilities which are meant especially for the disadvantaged sections of society. So we have certain standard products, like we have something called a Kisan credit card, which is intended to meet the small working capital requirements of farmers. We have what is called a general credit card, which is meant to meet the working capital requirements of entrepreneurs. So we are now putting in place a system where we will collect this data, which will be gender-based, so that we know at least what is the offtake of these products from a gender lens. I will stop here and contribute to the discussion as we go along.
Thank you so much, Nisha, for sharing. And it's quite interesting to note that when we do financial inclusion as well, it's also part of poverty alleviation. But when you look at it from a closing the gender gap, we know that if we do the correct things, we could actually increase our GDP per capita by 12%, which would mean a lot for all of our economies. But I also like the fact that you're tailoring based on the situation and context of India and making sure that it is fit for purpose, not just for anything else. And as noted, the quality is part of it, but it's work in progress, and there's no right or wrong as we move along. Catherine, what's happening in the Mzansi space at this point in time? What financial inclusion indicators should be refined to better capture the quality and depth of financial service usage? I think this is important, especially with the G20 presidency on the South African grounds, and how are we going to move the needle? Catherine?
So just as a context, we're a conduct regulator, right? So quality, fit-for-purpose products is our bread and butter. So a lot of what I'm going to say now is obviously informed by that. Also, we are a cross-sector regulator. So if we're thinking around access to usage and quality, already there is some usage data that's available if we start looking at Findex, for example. But two caveats to that. One is that it's quite limited, and what I find is that the data that's available tends to be focused on the banking and accounts, or the accounts and transactional space. You don't see a lot of the products past that. And also what we still see is a prioritization of headlining access. So in any of the statistics or the conversations that you see across magazines, what gets rallied around is the pure access data. So I think there's also, it brings to mind that we measure what we value and we value what we measure, right? That we really need to actually deliberately start prioritizing Access Plus and start talking about some of these other measurements more and elevating those conversations. So just in South Africa, I also want to talk about three approaches that we're looking at as part of this conversation. The one similar to what you're talking about is at the entity level. So we're a supervisor. And as a supervisor, what this means, focus on conduct, focus on quality. Financial inclusion, therefore, is a byproduct of what we do. We then are starting to look at as well about the well-being conversation. Quality does start getting into the well-being question as well. But when I've been talking to people around the financial well-being and the metrics associated with that, it looks like it's a more high-level metric. It's almost like a version of a poverty metric. It's very high level. As a regulator, and I'm sure like many in the room, we have to be much more targeted. We want to be able to measure gain some causality between our own interventions and what we're seeing as a result of those interventions. So I think there probably needs to, and maybe that's where the quality conversation comes on, and definitely what is in usage, when we're talking about usage, what does that mean? What does it mean when we're talking about quality? What does it mean when we're talking about well-being? And just to say, one of the exercises we've been going through is to leverage multiple data sources. In South Africa, we're very lucky. We've got the likes of FinScope. We've generated our own survey on sentiment analysis, which is going beyond the what of financial inclusion, but the why. Why are consumers making certain decisions and choices? And this is, as you say, we've actually disaggregated across various demographics, besides gender, also married versus unmarried, which gets very interesting. But what we've tried to do is link, so whether it's our sentiment analysis, whether it's Ombud data, Ombud complaints, complaints coming to financial institution, the trends there, enforcement data, FinScope data, link that actually to our TCF, our Treating Customer Fairly principles and outcomes. So we have metrics that are linked to product suitability, culture and governance, quality of advice, for example, And I think this is a really important step for us as a regulator to be better understanding what is happening in quality, in the nature of quality of financial products and services in South Africa. But just I think the main lesson from all of this is that as much as we would like there to be only one source of data, only one survey that we all rely on, I think there is an importance of harmonization and importance of standardization, but organizations differ. You know, the role of the regulator versus the role of a FinScope, a FinMark trust in South Africa. Countries differ. The way in which we start answering these questions will be very informed by what is the problem we are facing, how do we respond to our problems. Thanks.
Thank you so much, Catherine. Yes, we are all different, but unity and diversity is key, and I think we learn from each other and we take that. But I think we will always all have our unique DNA, which is what makes us a rainbow nation if it's in South Africa. But I think what is key as well is this morning one of our participants was saying we have done national financial inclusion strategies. In South Africa, it's the National Financial Inclusion Policy. Eswatini has done 2 sets of national financial inclusion strategies. India has one, but it's not been rosy. Even in implementation, that's the biggest problem we have, and accountability. But I think because ours is to look at the gender aspects and collecting gender disaggregated data, what are the challenges we face as well? And how can financial regulators and policymakers integrate gender responsive metrics into their NFISs? I think this is key. Political buy-in, policy buy-in, everybody are moving together to move the needle. DG?
Thank you, Sharon. I think what we have done is put frameworks in place. And I think in the morning I said value proposition is important, because what tends to happen is that because it becomes a regulatory requirement, the economic agents work towards compliance. So they will tick a box, we've complied, we have a product, and we tick a box that the product is there. So now we have to look at effectiveness. So we launched our sex disaggregated data template. The banks are providing the information, and we also have a small scheme guarantee program which was established, I think, in the 80s to promote financial inclusion. If you look at that and you split it by gender, you do realize that women have accessed that facility less than the men. But also what you learn from that data is that they are the ones that service the loans. So when they get the loan, they service it, and the asset quality, if you split it by gender, the asset quality for women is higher at 99%, and for men, it's around 49%. So it tells you that if we're focusing our efforts in the right place, we would be giving SME loans, the guarantee schemes, to women. Even for the financial institutions, if they would target the women, their asset quality would actually improve. But we don't use that information. We design, we work with the frameworks, and we never comb through the data that we collect to inform the decisions that we make. So with our sex disaggregated module, we want to include effectiveness and split it by asset quality, split it by product, split it by sector, and you use a gender lens to assess the agricultural products that you've supplied and their effectiveness. If we did that, we would know how to grow the sector, and it's a benefit to all of us. So the challenge is us not using the information that we have to make informed decisions for the future. The challenge is we are basically compliant. You know, I think my colleague has shared that India has done all these things, but if you then test the market, you'd see that they've just complied with the bare minimum so that the regulator is not in their face. You know, it's like AML, the law. We comply with the law not to protect ourselves, but because we are afraid that the police is going to walk into our door. But if we're looking at how we are going to benefit, then it would be a different aspect. We also did another study. In Eswatini, we have a dual system. So you have the Swaziland law and custom, and you have the common law. Women are married using either, but Swaziland law and custom makes the woman a major spinster. They transact on their own behalf. Common law, if you're married in community of property, you need permission from your husband. Yeah, but when we walk in, the banks do not ask what marriage. They say you are a woman, you are married, go talk to your husband. And the women walk out and never come back. Whereas if at least you said, what is your marriage contract? You'll be able to service the women that are married in Swaziland law and custom, and then have a conversation and support the woman that needs to go and talk to their husband. But we're all painted in one brush. And when you talk to the woman, they tell you, I'm married, common law, community of property, but if I go to my husband, he is going to say no. And this is a woman doing a small agricultural project and is supporting the family. The central bank in 2000 or early 90s issued a directive to say for savings, the women do not have to. So we were able to say, this is the law, but there's a directive to support the women. So the regulator has probably done its best, but it's how we then enforce, you know, conduct issues become important. The market conduct, how does the market react to the guidelines, to the frameworks, to the laws that we've put in place?
Thank you so much, DG. I think people can have a conversation with you during lunch on this common law and Eswatini law. Interesting dynamics. Nisha, in India, how can we, what are the challenges that you're facing as well in collecting data as well?
Firstly, I'd just like to clarify one point to what Felicia mentioned, that when I talked about our data reporting frameworks, yes, that is regulatorily mandated, but none of the products is. That is commercial lending. So banks decide who they want to lend to. Where we have a directed form of lending is priority sector lending, where banks have to attain a certain percentage of their lending by lending to specific sectors. But how they do that, they have a wide menu of options to do that. If they're not able to attain the target by lending themselves, they can buy portfolios from other banks that have lent. They can invest in securitized assets, or in the worst case scenario, they're not able to meet their targets. They will end up depositing an amount equivalent to that shortfall in a fund which will not earn them much return. So in the sense, that framework is designed to ensure that credit flows to where it is what is considered to be important from the policy angle. So that's the mandate part of it. Otherwise, as far as products for women, etc., are concerned, or there is no compliance there per se. But when but to your question about what are the challenges we face, see that as far as usage of financial services by women is concerned, it is usually our studies show that it has a lot of relation to the income, to the education levels, and when it comes to credit, the socio-economic factors play a very important role. We haven't yet collected data to show how our push for digital payments has translated in terms of offtake of such services by women. We hope to have that data in place through the system that we are putting in. But what we hope to achieve is that, in our digital payments push, what we are doing is making a menu of payment options available. We have, through a collaborative mechanism which involves the government at a sub-regional level, which we call a state level, we have a body called the State Level Bankers Committee, where you have the banks and you have the government participating together. Now, through this mechanism, we have tried to push digitalization at a district level. And what we say in that is that banks should make available or enable every account with one of the digital payment options at the option of the account holder. Every willing account holder should have a digital payment option. On the other side, the merchants or the businesses should be equipped with digital infrastructure to accept payments. And supporting all of this should be a financial literacy element so that there is sufficient awareness going behind these digital transactions. Now, it would greatly help us going forward if we are able to collect data to show how much of digital transactions are happening in these, through these newly enabled facilities, and how much of that is happening by women. And maybe then we would get some insights, and products could be built around that, and we could see where there are problems and what is it that we need to solve for. But that is going forward. We would need to collect this data to be able to. But essentially, without a gender element to it, what we're trying to do is enable people to build digital footprints and actually become data rich, so that becomes the collateral based on which they can engage in a much more meaningful manner with the financial system.
Thank you, Nisha. We are actually running out of time, but Catherine, quickly, please also, just in 2 seconds, because we're in your land, so we can cut your time because you're our gracious host. So thank you.
So the challenge for us has been not about collecting the disaggregated data. I mean, I think it's one of intention. If you want to collect it, you can issue a survey and you can collect it. I think to your point, it's what do you do with it. So we've generated disaggregated data, as I said, on various shapes and forms, not only looking at gender, also including married versus non-married, and it comes up with really interesting information. So for example, actually in South Africa, women are more financially included than men. Product preference also differs considerably. So men are more inclined to be using their transactional accounts more effectively. Women are more inclined to save and do use savings products. So I think there's a lot of interesting information there. The question is, what do you do with it? And I think this is where the challenge comes in. Again, how you use it will depend on who you are. We're the regulator. We've got 2 main instruments that we can use, which will be our supervisory interventions as well as financial education. So we can really generate bespoke interventions. And I must also say, as regulators, we love to introduce new rules. I think we've got to be tempted against introducing new rules, as opposed to using the rules you've got or the law you've got to be having ongoing supervisory discussions with your regulated entities. talking to them about what you're seeing and the woman, the female experience, the woman experience, the married experience, the unmarried experience, and seeing how they can then respond internally on a very real way. The same with financial education. In our case, we are responsible. We are one of the stakeholders responsible. We can play a thought leadership role in sharing this information with financial institutions, with NGOs, and other stakeholders to see how collectively we can, each of us, use this information in a way which is relevant to how we play in this space.
Thank you so much. I think because we're running out of time, panelists, just a quick response to this. With the rise of DFS, digital financial services, how should financial inclusion measurements evolve for impact of digital access? And what roles can central banks actually play in this? 2 bullet points each so we can allow our audience.
Thank you. I think I like using we because I think of ourselves as a financial ecosystem, the regulator, the service provider, and the users. So I don't usually distinguish that this is my personal role as a regulator. So just to give context in my interventions. But having said that, I think what we need to look at, I've said it several times, is effectiveness. So we've covered access and we've done a pretty good job. We are now on usage. We're doing a pretty good job, if I say so myself. Going forward, we need to look at effectiveness and value proposition, because if we open up the financial services sector, we will have more competitiveness in the system. We will probably be able to lower the cost of doing business and increase usage. If we do that, we need to see how it all plays into the structural issues we're trying to address: poverty, employment, and improved well-being.
Data enables us to identify vulnerable groups. We need to understand who is more vulnerable within the digital financial space. Interestingly enough, we've actually done a recent digital feasibility study of digital financial education, and actually people are more empowered than we think. Again, data is power. We need to continue getting this evidence, because that helps us tailor how we intervene. Thanks.
Thank you so much, Catherine. Can you give my panelists a 2-second round of applause, because I am out of time. I'm going to be sent back to Abidjan by this afternoon by the looks of things. Brendan and Liz are just, but I think it's very important discussions we've had, and I don't know how our panelists that have comments, Brendan, can I have 2 seconds, please? There's a question from the African Development Bank, and we have the Wi-Fi code with them on financing for women MSMEs in Africa. So I cannot. Appropriate financial products and service, effectiveness, fit for purpose, quality, and how we use our data for the correct things, while the mic is getting to my colleague from African Development Bank. Thank you.
No, thank you actually for this very interesting panel. Mohamed Uba from African Development Bank. As you rightly said, we are very much involved in financing for women, financial inclusion, dealing with financial institutions and understanding what are their objectives in terms of being profitable institution. Whatever you do has to speak with their preoccupation in terms of credit worthiness, financial viability, and profitability. I know maybe it's not the fora to say it, but any incentive, any program that you bring has to speak to that for them really to be interested. So this is why we are really, working through 3 triptychs: technical assistance, blended financing, and then sort of guarantees, providing sort of higher share of guarantee when it comes to funding women, providing them with sort of cheaper financing when it comes to targeting women. So this is really how you come, how you bring financial institutions interested in that area. Of course, again, doing that is not enough. You need to monitor it, you need to track it. And this is why maybe the policy and the regulatory aspect is very important. I just wanted to bring that perspective. Thank you.
Thank you so much. I think I'm going to be chased away, but thank you so much to my panelists. And definitely we're moving the needle, but we need to do it in an effective way, fit for purpose, and noting that we are all different, but we all need to achieve one goal, and that's financial inclusion for the empowerment of women as well. Thank you.
Thank you.
Thank you.
Thank you very much to the panelists. It was obviously a great segue, I think, into our next panel, when we talked about the different frameworks and the stages of recording data, that need for quality data and the data being fit for purpose based on the outcome. I can't think there's a better way of moving forward to think about the importance of consumer and customer protection within that, and the intention that's required in the data that's being collected and how we're doing, how that's being done. So Florian and your panelists, we welcome you to the stage to discuss those emerging trends. Florian and Elizabeth Gathia, and I would like to thank Magda for stepping in at the last minute due to a panelist change. So we really appreciate you being able to do that.
Thank you very much. Bonjour. No, I won't continue in French. I could, but I will not. First, I would like to welcome very much Magda and Elizabeth. Thank, of course, both of them for being panelists in this session, and special thanks to Magda. You all know her, of course. She has many hats, but co-chair of GPFI, chair of the International Network for Financial Education at the OECD, and also, of course, the director of Financial Consumer Protection and Financial Literacy at the Central Bank of Italy. And we are very happy also to have Elizabeth Gathai, who is Women's World Banking and Regional Health for Africa. So it's very good that we have an African component in this session. I think I'm really glad because we had two sessions which are fully female panel. And I have to say, great. Thank you for the organizer. Yeah, you can applaud. Not me, the women in the room. It's very rare. When I started my job, most of the panel were mostly men, and it looks like all okay. And once I was asked, but there is a problem. This panel is only female. So I think that is great that now we can have two panels in a row with only female and be happy about it, and also having a specific gender lens. So I just wanted to start off by saying that. Many of you know me, maybe some of you don't know me. I've been working on financial inclusion, financial literacy, financial consumer protection for now 2 decades. So I feel a bit old by saying that. And I think that the digital component of it came relatively quickly. I think the first time in the G20 that we had a focus on digital issues in financial inclusion area was during the Chinese presidency. It was 2016, so you see we are 9 years after that, and of course digitalization has increased largely during the pandemic. It came with many benefits, and I think the previous session have highlighted all the benefit in terms of access to financial products, but also quality financial products, and not only access, but products that are more targeted to consumers in a way. Open banking is also offering various kind of possibilities. Our session is more going to focus on some of the challenges that digitalization is bringing in terms of possible financial exclusion of some groups, but also fraud, scams, cyber security. We know that also AI is actually a great way for some people who have no credit scoring to have access to credit, but we also know that AI hallucination is something that is actually existing, and that there is a lot of bias in the AI model. There's also an issue around competition in AI. So we will focus on the challenge, but I think I would also really like this session to be not only about the challenge around the digitalization and what we need to do in terms of financial consumer protection and digital financial literacy, but also how digitalization can be used to support more access, more quality financial inclusion, which is the main theme of this presidency. So I think it's really important that we also end on a very positive note around digitalization, because I believe it's a great opportunity for all of us in this room, but more importantly, for the people outside and for financial well-being. So I think we'll look at both of this. At the OECD, obviously, we've been looking at what digitalization means for financial inclusion, financial consumer protection, and financial literacy. And our principle, the G20 OECD principle on financial consumer protection, is really recognizing what digitalization is in terms of challenge, but also what it is in terms of opportunity. In a similar way, we've developed some framework to develop digital financial literacy for the population, and especially specific part of the population. So I won't say more about the OECD work here. Of course, I'm happy to say more, but I don't think that's the purpose of the session. What I would like is just to flag first a little bit of what we've been doing in terms of data, and I'm really pleased that this session is just coming after a session on evidence and data. At the OECD, we do believe that we can do no policies without evidence and data. And what we're doing these days on digitalization, especially in the Task Force on Financial Consumer Protection, is developing a risk dashboard, which is also looking at digitalization and what kind of risk it is bringing. And of course, what we see is regulators here and around the room are actually concerned about mounting level of frauds, AI issues, as I mentioned, digital financial exclusion, lack of digital skills. So these are things that we are seeing in our risk dashboard, and we have evidence on this. And of course, what we want to bring to the table are some solutions that we will be discussing now in this panel. I have to say we are at the end of this very interesting also conference, and I'd like to thank the organizer again for inviting me to moderate that. But it's also the last session before lunch and before you and exploring Pretoria. So I'm glad that we are two panelists, but I also would like this session to be really interactive. There is a lot of knowledge on the stage, but also in the room. So I will use my prerogative as a moderator to also ask questions from the audience. So be prepared. Don't start sleeping. Don't be, uninterested about the panel, because you can be called at any time to respond to a question. But first, I will, of course, start off by asking our panelists, Magda and Elizabeth, a few questions, and we'll be interactive in that way. And then I'll come to you, and of course, you are also free to ask questions, so I'll be fair this way. I will start with you, Magda, if you agree. I would like, of course, to ask if you can tell us from your regulatory point of view, Italy, but also global perspective, what do you see as the main challenge in terms of digitalization when it comes to financial consumer protection and potentially financial literacy?
Thank you very much, Florent, and thank you, all of you, for being here. It's a pleasure participating even at the last moment, really. The challenges, you actually mentioned some of them, and I must say that we have actually explored them at length with the GPFI, with the Global Partnership for Financial Inclusion over these last years, because as you were saying, we started exploring the great opportunities, especially after the pandemic, with the digitalization in many areas of financial markets, financial services, but little by little, we discovered many challenges. Of course, the opportunities are probably prevailing as long as we govern the challenges. And you mentioned some, of course, probably the one that we are all aware because it affects our daily life are the frauds mainly in payment, but also in other areas, actually. They are really increasing everywhere. And they are becoming more and more sophisticated, so even for those of us who are equipped somehow, it becomes harder to fight them, to defend ourselves from those. Here, what I want to mention is that it's really essential that we manage to deal with them, and we will speak about the solution somehow or how to address them, because in order to make sure that digital payments keep increasing, and they are, of course, but in order to make sure that they are really increasing and they are a source of greater well-being for everybody, we really need to deal with frauds, because they are becoming a source of distrust among groups of people who are not able to defend themselves. Even if in percentages they are probably relatively limited, the perception of the people is that they are really a problem in our daily life. So we have to address this. Connected to this is data privacy. We know that there is a risk of data appropriation, of which we are not aware in many cases, but in many cases we give our consent without really being fully aware of what we are doing. So these two dimensions generate a risk of not knowing what is happening to our data and that they are misused or even used against us in the course of our life. Then I would mention behavioral issues, because the fact that we are dealing with financial services in a much quicker and easy way might reduce our awareness, our perception of what we are doing. Over-indebtedness is one of the consequences. We deal with the credit opportunities in a much lighter way. We know all about buy now, pay later. There are many instruments that we can access in a very easy way. So again, not being aware, having low financial literacy, but in general, the possibility of dealing with this quickly creates issues. Related to this somehow, it's the whole area of investment, where again, we have many opportunities of doing them quickly, easily, sometimes not being aware. In some areas like stable coins or even going further into crypto, we don't know exactly sometimes what are the protections that we have. They are very risky investments. So again, not entering in this world without the sufficient awareness and knowledge creates a lot of risks. Then moving ahead, you were mentioning both the risks of exclusion and even of discrimination. Exclusion, of course, as financial instruments and services become more and more digital, well, there is part of the population, some groups that are not sufficiently digitally equipped that risk being excluded, and at least in a transition to becoming more digitally equipped. And we have data showing that this is more common among those who are who have low digital literacy, but also in general low education, low income. Elderly people are, of course, at risk in a sense, also because this goes hand in hand somehow, at least in some countries, with the reduction of branches of financial intermediaries. So you really need to move into digital without having being sufficiently equipped. And then the final one is going into AI, machine learning, the risk of discrimination, which you were mentioning. Of course, AI, machine learning offers enormous opportunities of financial inclusion. Credit scoring is probably the main areas in financial services where this creates opportunities for inclusion for those who had not enough data available to financial intermediaries to be included in the financial sector. But of course, here again, there are risks of discrimination and hence exclusion for some groups if you are not well equipped in governing data which are being used, and in governing algorithms. And this, of course, becomes more and more difficult if we step into generative AI. So this will be a huge challenge for all of us. I think this is more or less what we are facing.
Thank you very much, Magda. I think that was also very good because you covered various areas of the financial sector, and indeed digitalization has impact on various areas of the financial sector, not only purely banking products. So that's excellent. You also started mentioning marginalized group. I'm not going to say that women are a marginalized group. They are more than half of the population, but they are a very important group, and this is how I would like to turn to Elizabeth now to give us a little bit more of the gender lens and perspective in terms of mitigating risk and also enhancing digital financial literacy, specifically for women, but of course you're free to speak about other groups, but I think it's very important that we also look at what can be done for women, not only in terms of digital financial literacy, because it would mean that they are less digital financially literate than others, but also in terms of design. Is there something that we should do in terms of financial products? So Elizabeth, over to you for a more gender lens.
Thank you so much, Flo, and thanks to my colleagues and all of you. Let me start by saying there's a fundamental issue when it comes to digital financial service, and the question we beg to answer is regulation in consumer protection. Is it becoming a runaway target? And are we simply playing a catch-up? And are there real ways to safeguard consumers without stifling innovation? At Women's World Banking, we work very closely with regulators and also with financial service providers. And this is the question that we are asking ourselves every day. When you go out there to meet the women, there's still all these complaints. We do not understand the product. I was conned, or I got into this challenge of scams. How do I protect myself? So at Women's World Banking, we have what we call women-centered design, a very structured approach in terms of designing the products, because it all starts with the solution and the channel that the women are interacting with on a day-to-day basis. And what we emphasize is start by understanding the pain points of the women. What are their fears? And what are their challenges? But unfortunately, financial service providers do not look at it that way, and that is why we are encouraging them. Can we go get out there and get real data, understand what women are looking for, and solve for a real problem? And proper product design starts with defining the problem and identifying the need you're solving for. And that is where we start. And the next level then is, are we designing, when we design, are we testing back to the women? Are we giving them the opportunity to say, is this real product really addressing my challenges or my needs? Is it solving for my fears? When you tell me to use a digital channel, how do I protect myself? Things like multi-factor authentication, PINs, that is not common knowledge to the low-income women that we interact with on a day-to-day basis. When it comes to taking the market, the product to the market, what are some of the information when it comes to selling? There's a lot of competition. Are we disclosing all the information? Are the financial service providers making that extra step? There's a lot of advertisement on social media platforms, on radios, on TVs, but we find some of the women we interact with do not even understand, because these are not in their language that is common to them or what they're used to. So what sort of information and how do we disseminate this information to the women? And that is where we're really having real conversation with financial service providers. And what is the role of regulator in terms of the information regarding the product getting to the women? We also looking at the role of financial literacy, and it's part of go-to-market approach. And we really need to demystify financial literacy, because it's not just putting content on the social media platform, it's not just gathering women or the low-income and marginalized groups and really talking about financial, and we really need to demystify, and it has to be very simple. I remember the days in banking when I was interacting with women. One of the ways we were talking about this issue of digital fraud, we used to talk about the invisible thief, because at home they know how to take care of, they can close the door, they can close the window, but this thief cannot be seen, cannot be heard, but you just find your account is empty. So we really need to bring it down to ways they can understand. Women trust their children. You find they're sharing their phones, their passwords with their children. They set them to go and withdraw money for them, especially from where I come from, Kenya, M-Pesa. Go bring me 10,000 shillings, but they do not know. Their children withdraw more. So how do we protect them from all this? So there's a lot of need to really get to the women and be as simple. They're not complex as we are. They're not complicated. They like simple language, simple tools. And I know one of the things that really hinder digital financial inclusion, I have had personal experience, is when I attended a meeting, and just one woman, a meeting like this one with over 100 women, said, I was defrauded, and this bank, you're telling us about this product. And you know, it was a big challenge because most of them said they're going to close the account. Those are the real challenges that financial service providers are facing. But the big question is, are this conversation we're having here happening in the boardrooms? At the boardrooms, they talk about the product, the real business case is the profit. How much do I make for this? Give us the real business case. How do we bring the consumer voice and amplify the consumer voice even in the boardrooms? When the regulators are making the policies, how do we bring the consumer voice? We've seen progress in some of the jurisdictions. I was looking at Rwanda and what they have developed as a chatbot where consumers can directly lodge their claims. So there's more visibility into what the consumers are facing on a day-to-day basis. So all these are some of the intervention, and of course we can't, I can only underscore the importance of gender disaggregated data. You cannot solve for what you do not understand. As a regulator, what we need from a regulator's standpoint, they have the platform to have a national data dashboard, because there's a lot of information, a lot of data coming from consumer associations, from the consumers themselves, also from financial service providers. But do we have a common dashboard? Can we probably have more data when it comes to consumer protection policies? Should it be risk-based based on the data that we have? Those are the real questions we need to address. And as I conclude, let me just highlight one of the things we have to do is to empower the consumer. And I always look at it from what I call the 4 R's. Number one, the consumers or the women we are serving down there must understand the risks. And that is the responsibility of the financial service providers. Can they integrate and embed consumer protections aspect in the entire customer journey and ensure the customers are aware of the risks? The second R is what are the rights of the consumers. Most of the times, the women down there will never raise a complaint because they do not understand even their rights. They fear even complaining because they think the bank will not avail the services to them. How do we bring more exposure to them and awareness about their rights? What are their roles and responsibilities in protecting their data, and also one of the biggest challenges is login credentials, where you give out your PIN, your password. What is the responsibility? They need to be educated around that. The fourth one is redress mechanism. Do they understand? In case I have a challenge, where do I go? Let me stop there for now. Thank you.
Thank you very much, Elizabeth. I think it was really great. I like really all that you said, especially the fact that you stress really an important fact is women have different needs when it comes to financial products. They are not necessarily more challenged, they just have different needs. And you mentioned quite a couple of times at the beginning, fear. And this is what we find in the data, is that quite often women lack the confidence. I wouldn't say all, again, we're speaking about average, but there is something around the confidence that is really important. And also you mentioned the need for data. Of course, it was stressed in the previous session, but I think it's really important that when we are designing policies, when we are speaking to service providers in terms of the design of product, when we are saying, well, the decisions are made in the board, and actually we need to hear the voice of the consumers in the board, we have the right data to speak to that. So thank you very much for this intervention. I will turn back to Magda, because initially we talked a lot about the challenges of digitalization in terms of regulation and financial literacy. Now I'd like to know from your perspective, Magda, what you see as some of the solutions and potentially some of the opportunity that digital is offering to regulators in particular.
Right. Well, as we discussed, I think the starting point is that we have in front of us a complex problem, opportunities, but also challenges. And my first point is that we have, a lot of innovation going on, and innovation is certainly very good, but the very general issue that I have is that it has to be governed. In order for innovation to produce benefits which are really shared among everybody and not concentrated among few, you really need to govern innovation. It's difficult. You always have to balance the possibility to do innovation with the fact that you have to address and govern it, but I think this is a very important issue. And then how to address all the issues that we discussed. I think my idea is that you have to use a set of tools. There's not just one bullet. So you need good regulation. For example, regulation that addressing the issue of payments and frauds. In Europe, we have a relatively good regulation on payments that put a lot of responsibility on producers, on intermediaries, and that actually, in terms of responding to consumers being subject to frauds. And this had the consequences that they increased a lot their level of securities. So in Europe, actually, the level of fraud in terms of percentages is very low. So regulation in general, very important. And what we were discussing about designing of products, again, good regulation can help in that direction. Again, in general, in many countries, we have product oversight and governance rules that impose producers to think about the real needs of final users when they build products. So first, regulation. Second, of course, what we do is conduct supervision, consumer protection by authorities. And of course, here we have really to continue to adapt to what's going on. So we have, first, we have to keep a very open dialogue with consumers, with other authorities, because now the overlaps becomes very common. But then we have to develop many tools to be really present on the market, be more invasive in a sense, for example, using mystery shopping or other tools that allow us to get really closer to the behavior of producers, use behavioral analysis to let us really understand how consumers react and hence how we can help them really. And of course start addressing new issues like consumer discrimination with AI. We can be helped by innovation using subtech instruments that allow us to use a lot of data in a much quicker and more effective way. But yeah, we have to develop many, many tools. The third pillar, so regulation, conduct supervision, consumer protection. A third pillar, which I didn't hear a lot today, but I think is very relevant, is having redress mechanisms for consumers. There should be easy mechanisms outside the judicial system where consumers can go and receive an answer in a quick and not costly way. I think that's fundamental to increase their trust. If something goes wrong, they have to find a place where they can ask for help and receive a solution in a quick way. And then there is the fourth pillar, which is, of course, financial education. In this case, digital financial education. And we have to do a lot because awareness, but also awareness of financial products, opportunities and risks, but also awareness of our own duties and what we can ask for, the protection that we can have is essential. I would say again, around financial education, the pillars are, as you were saying, data. We need to have good data to understand where we are, where are the weaknesses, why they are there, in order to address them with solutions. So analysis of this data, solutions that based on data need to be targeted. By now we know that we have different groups in front of us. So we have to provide products, financial education products, solutions, even language that are really addressing the different needs of different population. Women, probably in some sense, as you were saying, trust, make their fear disappear, but also other vulnerable groups. So for example, for women, but mainly for elderly, for some groups of the population, you need, for example, to use TV channels that are easy to reach for these people, and maybe a lot of in-person programs. When you talk about youth, well, there you have schools and you can use a lot of digital instruments. The third element, so data analysis, targeted programs. Third, impact evaluation. We really need to evaluate our programs because we are doing a lot, all of us, so we really need to understand what works in order to direct our resources into that direction.
Thank you very much, Magda. I think you made some very important point. Of course, regulation, consumer protection, redress mechanism. It's true that it's not been mentioned a lot for us at the OECD. It is key. It's part of the principle on financial consumer protection. Especially in a digital world, it seems like quite obvious that consumers have easy access to redress, even in a digital way, and it's easy to do that. And of course, the financial literacy component, I would add to that, if I may, that there is also some kind of digital misinformation as well. So as regulators, we also probably have to be more active in that sphere, especially I'm thinking of young people and a lot of what is happening on the crypto market in some cases. But thank you for really highlighting these 4 pillars that are really essential, and also mentioning that digitalization can be used for enforcement and supervision. So subtech is something that is actually working, used in many countries, and very, very, very effective. So you mentioned like the key pillar of the solution. I'll move to Elizabeth again to speak more about the collaboration between regulators, the providers, the tech providers, the consumer advocacy, in order to improve consumer protection, of course, in a digital world, while we balancing innovation, because we all agree that digitalization is actually an opportunity. So how do we manage to make this collaboration happen in a positive way? And specifically you at the Women's World Banking, how do you do that?
Thank you. Very important question. This work cannot be won by one person, and there has to be collaborative efforts. There has to be a proper balance between the providers of the financial services, the regulators, the consumer associations, and other stakeholders. At Women's World Banking, we happen to work with all the 3 and more, and I'll just give an example of an initiative we are doing in Nigeria with the Central Bank of Nigeria. We're looking at how can we advance financial inclusion digitally for women, because we still have a long way to go. And one of the things we've done, and we have been asking ourselves, is how come the financial inclusion, some parts of Nigeria, like northern Nigeria, is quite low. And we realized that there's no way you can get there until you can really have meaningful impact unless you bring all the stakeholders together. We look at the kind of products we have, Sharia compliant products. The religious leaders, very strong in those communities. Maybe agents, very strong as a channel for last mile. We're looking at other associations like agents, associations, EFINA, and bringing everybody together. And we're asking ourselves, how do we really ensure that as we increase digital financial inclusion and bring trust and confidence into the system? So one way of doing it is bringing the stakeholders together and really deliberating on effectively how do we bring that impact into the marketplace. Because as someone said today, it's not that we lack the consumer protection frameworks, but the real challenge has been, one, they're very fragmented. You know, different regulators have different frameworks, but they're not really, yielding the real impact or meaningful impact on the ground. So when we interacted with CBN, one of the questions is, we don't want to sit here and draft more policies, they're enough, but can we bring all the stakeholders to help us understand what is the real challenge and how can we do it better as we advance financial inclusion? Because creating trust into the system is one of the fundamental things that needs to be done. That's just one of the initiatives. We also have what we call Leadership Diversity Program. And out of that, we have developed a program called Tech Equity, where we bring all the regulators together to just deliberate issues that are the trends that are emerging in the financial sector. And Out of the 20 we had in the last cohort, a third of them focused on consumer protection as a key priority for central banks. And in that forum, you're able to exchange information and ideas on how you can effectively implement consumer protection frameworks on the ground. We are also working with, and this was mentioned earlier, with central banks. Like we had a convening by Central Bank of Egypt where we brought together all the financial service providers to just discuss about product design and consumer protection issues. And it was very, very informative session because you realize financial service providers don't give a lot of thought into product design, you know. It's very easy to create a product based on what your neighbor and what the competition is doing without really giving it proper focus. They don't think more deeply about the consumer protection aspects or how consumers engage with these products. So that forum, a 2-day forum, was very, very useful with the entire industry and the Central Bank of Egypt just to really discuss these pertinent issues. So we also engage a lot with the community agent networks, like the religious leaders, just to get information. When you're doing research, we interview them. We interview the community stakeholders just to really get to understand what are the real issues that are happening on the ground. Because again, it has to be bottom up. If you don't engage, if you don't understand, even the community leaders, there's still a gap, because you realize that especially for marginalized groups and vulnerable groups and women, the community leaders have a very big voice. And when they talk to them, they believe what you're saying. So we're using all these important forums, stakeholders, engagements to just see how we can amplify this aspect of consumer protection, among many other issues in financial inclusion. So I can't overemphasize the need for collaboration, and we have to come together because this cannot be won by one person or one stakeholder. It has to be a collaborative effort nationally, regionally, and also globally. Thank you.
Thank you very much, Elizabeth. Again, excellent points, I think. I think one of the main issues that we face with digitalization and with the financial sector is the fragmentation of the regulation. And this is where collaboration is really, really key. I've been chairing groups working on financial inclusion, consumer protection, financial literacy, and I've heard too many times, oh, but this is out of my mandate. I can't regulate. I can't do anything about it. So it means that there are loopholes where consumers are not protected, and this is only by collaborating, discussing with each other, that we can identify those loopholes and perhaps think about the mandate differently. Something else that you mentioned earlier, and you mentioned it again, and I think is really, really key, is product design. I think this financial consumer protection journey has evolved. When we started speaking about financial consumer protection years ago, after the global financial crisis, basically, we were really focusing on disclosure most of the time.
Transparency.
And now we are moving, thankfully, to a place where we are looking at the best outcome for consumers, and this comes with product design. So it's really, really an important point that you made, and that I think is absolutely essential. Now, I said that you should stay awake during this session. Of course, our panelists can still have comments, but I would like also to see in the rooms, because there is, as I said, a lot of knowledge, as you can tell, in this panel, but also in the room around this issue of the main risk in terms of financial consumer protection, financial literacy in the digital era, and what are the solutions. So I would like to hear from maybe a couple of countries, what are their perspectives on this, and they can be relatively short. Oh, I see hand raising. Luis, do you want to start first? Go ahead, please.
Oh, okay. I would like to start just focusing on one of the pillars of consumer protection, which I think is financial literacy. And I heard from Elizabeth something that I have never heard before outside of Brazil. That is the importance of the important role of the financial institutions in providing financial education and advising clients on the risks of the products or services that they are acquiring. And she used the specific language that we have in Brazil. Brazil has issued, our Congress has issued a legislation that mandates the central bank to supervise and to regulate financial education initiatives from financial institutions. And what we have in this law is that these financial education initiatives, they should be embedded into the client's journey with the financial system, which we think it's very important, because the consumer is only interested in learning about risk, in learning about credit or a loan when they are actually acquiring those products. So it's very important that we have the financial sector involved in providing financial education to the consumers, because they have the contact with the consumer when they are most interested in learning about that. That's the moment when they are acquiring a product or financial service.
Thank you very much, Luis. I will give the floor to the lady in the back, because ladies first, and then Lynn will. I'm sorry. That's a female panel. But I will give you the floor. And just before that, what Luis points and Elizabeth's points, some other countries are also doing that, like mandating financial literacy by the providers of financial products, but also making sure that it is actually financial literacy and not pure marketing. So it's a very good experience. Please go ahead with your question or your comments or your experience.
Thank you very much. I think I will share a comment and experience. And just touching on, I'm Shifra Chisha. I work for the Graça Machel Trust. And our work revolves around removal of systemic and structural barriers that hinder women's economic advancement. And we always say advancement, not empowerment, because the fact that we are here means we are empowered. So transformation, and there are three areas that we always look at, and I was really impressed with the information from the panel from the Women's World Banking, is one, transformation of the leadership within the financial services sector. We had the commissioner, when she was talking, she was saying that the experience we have as single women is the following. So it's important for us to make sure that within the financial services sector there's transformation, and we've done the work in different countries. In Zambia, for example, when we started our work, we had only one woman leading the financial services sector. We now have over 30% and over 50% at board representation. So we feel it's important that that is considered, because they understand the needs of the women. And also, secondly, we look at what was mentioned, the financial or digital financial literacy, so that we can be able to assist women, and also look at how then are the financial services products designed to service women. And I'll touch just on the study we've just done recently in South Africa, because we are based in South Africa, which was looking at the status of women's financial inclusion and looking at the digital access as a key barrier, where we looked at the internet penetration, which women continue to lag behind men in the adoption of the financial literacy. Only 12% of women have access to digital financial services compared to 17% of men. The stats are still very low, but we were looking at the gender disparities. But again, lastly, just also touching on what you've touched on the recommendations that we've looked at when we're looking at this study. It will be launched next month. It was really looking at adoption of the integrated policy approach. And I think you spoke about fragmentation of regulation. And that's exactly what the recommendations around that, when we heard from the women gender-focused frameworks, cross-departmental coordination in South Africa, and also looking at enhancing the data collection monitoring, which you've spoken about, and designing the gender intelligence financial products. Again, what we talked about today was how do we develop credit or products that then would look at women. But I also like the point that was mentioned in looking at women not just as stats or tailor-made solutions for women, but also targeting the women. Lastly, just incentive structures for better practice. But I also want to share just 2 experiences from 2 different countries, because we work in 20 countries. And this country was Uganda, where the Minister of Finance has asked the women in finance to look at the Citizens Financial Reference Bureau. And this is to offer financial services arbitration for women, so that you can be able to assist and make sure that we protect women. This is independent of the financial services. And lastly, again, in Zimbabwe, where the gender disaggregated data was done over years to be able to have the gender desks within the financial services sector. I just wanted to share a few experiences.
Thank you. That was extremely useful. Then I have Lynn-Will, and I think I have Supriya. And yeah, okay, we have limited time, but I really want the audience to participate. Since it's the last session, I think it's really good to hear from the experience in the room.
Thank you.
Lynn-Will, Supriya, and I saw another hand, so, and then I'll wrap up and give a last word to the speakers.
Okay, thanks.
Go ahead, Lynn-Will.
Thanks very much. I'll be trying to be brief because I know Supriya can talk quite long. So colleagues, just...
We'll see.
Just briefly, I just want to follow up on what Louise has said. So in South Africa, we also have the same situation where we want institutions also to do financial education. We have a financial sector code through which financial institutions have to use 0.4% of their after-tax profits on consumer education. We've also recently published conduct standards for financial education, which will compel the industry to abide, those that are doing financial education, to abide by these conduct standards when they do implement financial education. And it's largely based on that marketing versus branding kind of issues. But I want to also, in terms of what South Africa is doing currently from access to usage, because it's when the usage part comes in that digital platforms plays a huge role, because now it's an easy access. And I want to go to, and understand we've got women as a vulnerable group, but I'd like to also just highlight the youth as a vulnerable group. Just when we thought we managed our millennials, we now got Gen Z, or the so-called Zoomers, coming through, and they've been part of, or digital or internet access have been part of their lives all the time. In South Africa, we've got a stat that the emergence of influencers are now playing a huge role in people's and how they think about their finances and who they go to for financial advice. So I know that INFI, our OECD, as well as the IOSCO Committee 8 is doing a lot of work around that. But I think we need to talk about influencers and the role that they play, because about 42% of Gen Z in South Africa actually trust financial products that are being promoted by influencers. So I think that's an important aspect. And I think just finally, when we're looking for solutions, I think we need to have a consistent approach within countries or even globally, so that the messaging that we put out there to consumers is the same, that people understand the risks. I think the 4 R's that Elizabeth spoke about is quite important, your risk, but I think the responsibility of you as a consumer to do your due diligence in terms of when you click, and when you click here and you click there, that you know where you're going and what you're clicking on, and that you take that responsibility of clicking and whatever accountability comes after that. Thanks, Jay.
Thank you very much, Lynn-Will, for sharing the experience. I would just say I do not necessarily consider women as a vulnerable group, but, you know, I'm just a woman, so who am I to say that? I'll give the floor to Supriya now. If you can pass on the mic to the lady in the green suit. Thank you.
Thank you. Thank you very much. I'll try and stay brief because of Lynn-Will's jab, but I'll keep it interesting. So I think, so this whole women issue, you know, it's obviously the case that women have been discriminated against and underserved throughout the course of history, and that's not limited to the financial sector. If you look at clinical research, for every 1 study done on female rats, there are 6 studies done on male rats. That is relevant because that's how all our medication is made. So the point that we're not serving half the world who I also will not say is vulnerable, but half the world adequately is a totally fair point. And that we need to build and provide for diverse needs is a fair point. And that we need to consider multiple parts of that. So, for instance, we know women are endemically underconfident, so we can, launch specific interventions to increase confidence, and there's work like that out there. It's the product piece that I want to speak to a little bit, though, because this whole idea of tailoring products to women, yeah, there's some merit to it, as I just said. I mean, the context of, we need to, the product needs to work for the audience that it's for. But what we also don't want is the Gillette pink razor, right? We don't want a pink tax where you basically take the same exact product, make it pink, call it women, and then make it 13% more expensive. And so I feel like the danger in this entire perspective of targeting everything is that we're going to inadvertently get the industry to make a lot of money off of women just because they're going to, basically not call a spade a spade. So then what do you do about that? And you say, well, we're going to regulate those products. It's product-based regulation. And yeah, there's merit to product-based regulation, but the point with that is, so what do we regulate today? The vast majority of countries regulate entities. What is a bank? If you are a bank, then we regulate you and you have to follow these rules. There's some countries that regulate products, or like if this is the kind of product, we're going to regulate you. But all those things are changing. I mean, is Apple a bank? Is PayPal a bank account product? Is cryptocurrency money? What is banking activity? Like, all of these are changing definitions. The one thing that's not going to change is what is the outcome we're looking for, and outcomes-based regulation was referenced, and that outcome is always going to be financial well-being. The point of everything all of us do here, ultimately, is to help people live better lives, meaningfully better lives. The way we assess that is look at financial well-being. So if our regulatory paradigms are looking at that outcome, where we're saying, we don't actually care so much about what product you're selling, we don't care so much about who you are, whether or not you're a bank, we don't care so much about how you're doing it. What we care about is, what is the outcome it leads to? Does it actually make the consumer's life better? Are they living better? Then that is a regulatory paradigm that will, I think, stand the test of time, because all the rest of it is malleable. The industry will simply innovate around it, as it should. But if we want to genuinely protect people in the long run, then I think outcomes-based regulation is the way to go.
Round of applause for Supriya. Anyway, we have to wrap up, but I just want to take, because I know we are running out of time, I just want to just make 2 points about the last intervention from Supriya. I think I fully agree with the fact that we do not believe, at least at the OECD, that products should be designed in function of women, because we don't want this kind of discrimination, or we don't want products that are oversold for women, and discrimination in terms of product design for women is not something that is valuable. Support for women in terms of confidence is good. And the last word, of course, coming from me, and this won't surprise you, is that, of course, we want good outcomes and financial well-being, which has been, of course, the priority of the Brazilian presidency, is ultimately what we are looking for. And we are doing financial consumer protection in the context of digitalization, all for better financial well-being, better outcome for consumers, including women. I would like to thank very much our panelists, and I would like a round of applause for both Magda and Elizabeth. Thank you very much.
Thank you very much indeed, everyone, for that and for the interventions and the comments from the floor. I'm going to leave the hardest job to our next two speakers to try and wrap up and provide some closing remarks and some thoughts of tying all those different points that we've heard today. I think, just to think about those 3 points I've heard about complexity, but how we focus on the value of the proposition and the use cases for the end user in mind. Let's not forget who we're developing these products for. Partnership and interoperability and the need for that holistic approach. But then a lot of what we've learned today is about new insights and, importantly, new connections. So I'd like to welcome to the stage Natalie Africa from the Gates Foundation to provide some closing remarks, and then afterwards Francesca Brown from Women's World Banking to finish off and our call to action. So thank you very much indeed. Thank you, Natalie.
Good afternoon, everyone, and thanks, Liz. So, to tell you the truth, I mean, I don't know that there's that much for me to say. This morning's session was just so incredibly rich with insights and, you know, fantastic conversation around what's working, where the opportunities still lie, what challenges we're facing in the sector. That I don't know how I can really top it, but I'll share a few thoughts. So as Liz said, I'm with the Gates Foundation. I'm the Interim Director for Economic Opportunity for our Africa team. This work covers a range of areas around financial inclusion, around women's economic opportunity, agricultural development, and digital public infrastructure, as well as a few other areas. So, you know, it's kind of tying together all that work that the foundation funds in those different sectors. And I think, you know, the conversation, especially in the first panel today, where there was discussion around how we can integrate financial inclusion more with some of these other sectors, is really relevant to the vision that we have. So, you know, the discussion this morning in many ways mirrored the main areas that we are trying to work on as Gates Foundation when it comes to inclusive financial systems. Our work is really focused, for example, around building, enabling inclusive, instant, interoperable payment systems around the world, especially in Africa. Strong focus on expanding usage, on consumer protection, prevention of fraud, and so on. So we actually are trying to support work in all those areas and make sure that everyone is able to access financial services that are affordable, accessible, and safe. I think, you know, many of you in this room are actually partners with the Gates Foundation, and I think the work that you're doing is effectively, you know, to paraphrase the title of today's event, that is moving the needle. Yes, there's a long way to go, but I think there's a lot of really positive change that's been made. And I think there's great momentum this year with South Africa hosting the G20 presidency around the topic of financial inclusion as well as DPI. And it's also so great to see not just representatives from other parts of Africa, but also Brazil and India here today, because I think the South-South collaboration is going to be so critical to success, and we really need to build on that even more in the coming years. I just want to mention a few pieces of work that we're quite excited about in the foundation, and that we believe can further move the needle around financial inclusion, especially for women. And one is something that some of you may have heard of called the Women Entrepreneurs Finance Code, which was launched in October 2023 by the World Bank. And it represents a commitment by financial sector providers, regulators, and other players to increase funding to women-led MSMEs. In the pilot phase, this code will be rolled out to 24 countries. We believe South Africa is planning to sign on, and Nigeria already has. But what it's really doing is saying, rather than just different actors within a country or globally doing their own thing around trying to increase finance to women-led MSMEs, how do you have a more ecosystem approach? And I think this is something that has been missing in the past. And we're looking forward to seeing more countries sign up to this code. I'd also like to mention our partnership with Women's World Banking, which has hosted this event today, together with several other partners such as Finmark Trust, GPFI, the South African Treasury, South African G20, and SECO. But we do have a partnership with Women's World Banking, and I just want to call out a couple of things we're doing together. We are working in a few countries such as Indonesia, India, and Nigeria, focused on policy advocacy and digital financial services. And in India in particular, we have a partnership which we feel is going really well and is very holds a lot of lessons for other countries, I think, which is around expanding credit guarantees, particularly to women-led businesses and those in credit-deficient districts. Working with the Credit Guarantee Fund Trust for micro and small enterprises in India, and I'm sure Nisha, who is on the panel, knows about it. This program has been able to reduce risk perception, support a transition to larger ticket size loans for women, and stimulate employment creation. So just wanted to call out these. But before I end, I just want to share a vision that we have, or maybe I should say that I have, which I feel really integrates, some of the things that we were talking about today. And I think Elizabeth and a few others said, we've always got to remember who the person is that we're actually trying to serve. What are the outcomes we're actually trying to get with this work? So for me, the vision, and I'm kind of sharing this as a sort of call to action, is of a woman somewhere, maybe we can say northern Nigeria, since Elizabeth mentioned northern Nigeria, of a woman who is able to, benefit seamlessly from all these things we've talked about. So say a young woman who belongs to a village and savings loan group in northern Nigeria. By being a member of this group, she's perhaps been able to register digitally. She's been able to get access to an ag tech platform that with the group they've been able to get perhaps AI-enabled advisory services. They've perhaps been able to order inputs for their agricultural activities. They've been able to perhaps even use this platform to market and sell their products. This would be a digital public good that's been created and that enables them to have a one-stop shop around their agricultural productive activities. She's been able to get a digital ID, which in the past may have meant she's got to travel somewhere really far, and she's been able to get it through intermediaries within her actual village. She's now been able to perhaps, she's had a baby, she's had a child. She needs to get this child vaccinated. She's able to go to a clinic, and first of all, because she's got a digital ID, it's easier for her to register her child, get a birth certificate. We know many people in Africa, children don't even get registered, but this has been made easy through developments with DPI. So she's able to get a child a birth certificate. She takes the child to a clinic, gets the child vaccinated. The data goes into an electronic registry. Next time, if she wants to get the child vaccinated again, she can even go to another clinic, not the same one, because now the data is interoperable across the medical system in her state or in the country. She's perhaps able to benefit from, micro health insurance that she's been able to get through her village saving and loan association. So beyond her productive activity, she's been able to get health insurance that maybe she can use to pay for the vaccination or additional products for this child. She's maybe been able to register for child support allowance and been able to get a government payment allowance through being digitally registered. She's maybe been able to get a gift from her sister since she just had a child who lives in a neighboring country but was able to send her the payment digitally across borders. I'm just sharing this vision because I feel like this is where we want to go, and it's the same woman who could benefit from all those services seamlessly if we are able to realize the vision that we all have around putting these building blocks together. And I don't think that it's unrealistic, because a lot of this is already happening, but we need to accelerate, we need to work together so that we can achieve this integrated vision. But I think, we need to continue to remember that this is the one person, so we keep things simple, we keep costs down, and we are constantly asking what makes life easier for her. Women spend 3 times more hours per day than men on unpaid work. So solutions which are efficient, which are simple, which save time for them are really what we should be looking for. So with that vision, I'm going to leave you and just say, thank you to everyone for the incredible work that you do. Look forward to continuing to partner with many of the groups in this room. And thank you again to the host, to Women's World Banking and Finnmark Trust for inviting us and for asking me to help close the session. Thank you, Natalie. That was an excellent roundup. It's me and then lunch, so I will be incredibly quick. I know many of you, I can talk quite fast. So a roundup from ourselves. I'm Francesca from Women's World Banking, if we haven't met yet. Hope we can still meet at lunchtime. Thank you, Alvina from National Treasury, Prudence from Africa Union, and from Jörg from SECO, giving us opening remarks, which we've covered so much. I'll quickly refresh you. We talked about how gender equality is smart economics. Great. How we need to call on governments, private sector and development partners all to take action. And how we should be looking at how consumers are using financial services on a daily basis and whether those services are truly improving their lives or our lives as well. Then we had a Pan-Africa session where we started talking about delving into the million-dollar question: is financial health moving in a different direction to financial inclusion? And what is it that people really need and want from financial services? Which got quite existential, I think. And then we had the DPI session where I was pleased to see quite a focus on digital ID, which is a very basic building block for access, but also not an easy thing to implement. So ID there is a particular gender gap as well. So, we are quite focused on that. Followed by another key building block of inclusive payment systems, and how they build the groundwork to serve individuals' needs. And we have found in our work, which I think Elizabeth mentioned, was how sometimes, for example, women banking agents, so the channels are important of how those systems are implemented. Women banking agents work better in some regions for engaging women in financial services. So it's looking at the channels as well as the implementation of and design of the actual system. And we saw some interesting contrast between Brazil and South Africa. And I'd really like it if we can continue those conversations of that worked here, might work for you, it might not, but let's learn from each other in that way. Then we talked about gender disaggregated data, and we touched on particularly treating customers fairly in the South African context, and how men and women often use products differently to serve their needs, and also some cultural common law practices that impact the implementation of well-intentioned and well-designed policy, but when the rubber hits the road, perhaps things don't quite work as everyone expected. Last but not least, customer protection. Once people have the access to the services they need, customer protection increases the confidence and provides consumers with a sense of trust. And put bluntly, if you don't trust a service, you're not going to use it. So why would you expect anyone else to? So it's a vital part. And then policymakers, we know, play a key role in holding financial services providers accountable, particularly for embedding customer protection in their customer journey, including an emphasis on product design and demystifying financial literacy, I think was a term used. So lastly, a call to action. I think Natalie just painted a very effective vision for where we should be aiming and a reminder to keep things simple. We do like to overcomplicate, definitely, all of us. So a reminder to try to keep it as simple as possible. And reminding FSPs, financial services provider, that there is a strong business opportunity here to unlock value for
entire economies. Policymakers already really have the tools they need. And to close with a quote actually from Prudence from AU, she said the policies are in place, I'd say largely they are, the frameworks are established, the commitments have been made, and what remains is the execution. So no pressure, but that's all of us.